Members present here. Hearty welcome to each one of you for today's special program on half-day seminar on Companies Act 2013. Today, it's also a special day of introducing all the newly elected office bearers for the term 2022-23. I now request our new chairman, CA Srinivas T, to kindly escort Central Council member MP Vijay Kumar, sir, and also CA Gururaj Acharya, sir. Yes, I also request our immediate past chairman, CA BT Shetty, sir, to kindly also join us onto the dais. I also request our Kota Srinivas, sir, and also Geeta ma'am to kindly come on dais. Yes, yes, sir. Though, consciously his name is coming. I now request our immediate past chairman, CA BT Shetty, sir, to kindly address the gathering.
Thank you, Divya. Hearty welcome to Jnana Vikasa. Friends, change is only constant. Remaining everything changes. Bangalore branch managing committee, the new managing committee is took over the charge today. Friends, I'm really blessed to serve this largest branch of ICI, largest and most vibrant branch of ICI since last 6 years, particularly last 1 year as a chairman. I really grateful and thankful to all the members who made me take up this role as a chairman. Friends, before introducing the new committee members, I'll take a few minutes. I don't think I'll get another opportunity to speak. With the permission of the guest and the newly elected chairman, I'll take a few minutes to what all things we achieved in the last 6 years as a committee member. It is not an individual, it's a managing committee of the branch is working. Whatever I am telling is nothing is an individual achievement or anything like that. It is a committee achievement with the support of all the members of this branch and the support of the ICI in general. So friends, I joined this managing committee in 2016-17 and I was a member, managing committee member. And 17-18, I was CICASA chairman. In that year, we introduced CICASA Speakers Forum. Even today it is running. That is the mark we could make it in the last term. Then as a treasurer, the year 18-19, we could introduce many new systems in the accounting of the Bangalore branch, including monthly MIS and a real-time accounting. That again, it is a continuing, it is an impact we could make. And As a secretary, in the year 1920, the committee could introduce the employee benefit scheme for the employees of Bangalore branch, which was long pending, in fact, almost 56 years pending. The employees of Bangalore branch didn't get the employee benefit similar to PF. That also we could introduce in that year. And in the year 2021, I was vice chairman, not much of a role, but however, I constructively added value to the managing committee. In the year, the latest year completed as a chairman, we could do some of the important programs for the benefit of members. My vision, and when I took over last year, 19th of February, I said my role was to do 3 more agenda, empowerment of members and empowerment of students and image building. Friends, in that front, empowerment of our members, I did some of the programs which are new areas of practice, particularly the succession planning. So I believe it's a fantastic opportunity for our members. So those who are interested to can take up that. RERA is again an important area to the new area of practice for the members. And NGO, NPO, CA to CFO, and many more interesting programs we conducted for the benefit of members who could take up. And many members, in fact, took that area as a new areas of practice that I feel even a couple of them did well in that, that feels a satisfaction. When it comes to students, we revamped the coaching class and orientation and GMCS team. That also is doing fantastic now. And when it comes to career counseling, that is also one of the important agenda because the number of members coming to CA course was in fact reduced drastically. To increase that, our agenda was to increase the career counseling and reach more and more rural colleges or tier 2 cities and towns. In that regard, we could able to conduct 254 career counseling during the year and reached more than 39,000 students. That I feel is one of the highest in the history of ICI and in the Bangalore branch. Friends, the last thinking is the image building. In that also we have done something different than the normal. The first one is training of urban local bodies accountants. 240 urban local bodies accountants we have trained every day 2 hours. It's a virtual program for 6 days. That again, under the aegis of the ICI committee, we did that, but it's a fantastic, everyone appreciated that program. In addition to that, in government college, 2 faculty development program, Commerce College faculty program, development program we conducted. One is on GST, another one is IFRS. Again, it's a 6 days, 2 hours everyday training program. More than 600 in GST program and more than 300 in IFRS program. of image building. And I believe the new committee is going to take up in a much larger scale. So coming back to my role, today's is a welcome address. So friends, today is a most auspicious day. And we are really fortunate to assemble here for this change and for the Jnana Vikasa. We are really fortunate. We have an eminent personality and most sought after speaker or resource person. And I have not many other words to say him, how big he is and how popular he is. He is none other than our own immediate past Central Council member, MP Vijay Kumar. More than that, we are all proud he is recently appointed as independent director for LIC. So one more round of applause. Hearty welcome, sir. Friends, again, we are really blessed. In these last 3 years, we didn't had a Central Council member in Bangalore. Definitely, this committee is fortunate. We have our Central Council member, Kotai Srinivas. Hearty welcome. Friends, when it comes to company law, not only company law, Ind AS, IFRS, or any topic you say, an expert is Gururaj Acharya. I think since last 3-4 years, every year, whenever the changeover happens, Guru is coming. I think Guru is Guru Devo Bhava, like kind of a person. And hearty welcome, Gururaj Acharya. Friends, our one and only RC member, Geeta AB is with us. Hearty welcome, ma'am. Hearty welcome to newly elected chairman Srinivas, newly elected secretary Pramod, and all the newly elected members. I think their introduction is going to come. Yes, our chairman is going to introduce. Members, you are the reason, both joined physically and virtually. Hearty welcome to each one of you for this Jnana Vikasa. So hearty welcome. And thank you very much for all of you coming here. Over to MC.
Thank you, BT Shetty sir, for the opening remarks. I would like to call upon Mr. Srinivas, our chairman, to introduce the managing committee and the officers bearers for this term.
Respected our teacher MP Vijay Kumar sir and Gururaj Acharya sir, Central Council member Kota S. Srinivas sir, Geeta madam, our immediate past chairman BT Shetty sir, Secretary Pramod, committee members, and my dear friends. Welcome you all for the half-a-day seminar on Companies Act Revised Schedule 3, and as a part of new committee, chairman and new committee has taken over. On this auspicious day, we wanted to have one seminar, half-a-day seminar, in guidance of our teachers, to take oath as well as their blessings, and to introduce new committee members. I am in the committee for last 6 years, served as a CICASA chairman, treasurer, secretary, vice chairman, and chairman. Now I was taken as a chairman. Really, I humbled and moved by the support given all over my 2 terms and continued for third term. Really, I really am in-depth gratitude for all your support. I have a lot of visions for my chairmanship. In short, I am going to explain through my PPT. Before that, I love to introduce our new committee and office bearers. The first vice chairman, she is Divya S. I request MP Vijay Kumar sir to present her a bouquet. Our secretary, Pramod Hegde, I request MPV sir to present a bouquet. Treasurer Manjunath Hallur. MPV sir, please. I request Gururaj Acharya sir to present a bouquet to our SICASA chairman, Kavita. Co-opted SICASA member Tuppad and Sripad. Gururaj Acharya sir, I request to present a bouquet. I request Gururaj Acharya to present a bouquet to our committee members Chandra Prakash Jain and Rejo. Thank you, sir. We have 9 young and energetic team dedicated to serve for members and students. Now I'll go to my PPT. As you know, Bangalore branch is the largest and vibrant branch in India, having more than 14,500 members and 35,000 students. Leading this branch, I feel it is blessed. This opportunity will not get everyone. It is a God-given opportunity. I'll treat it as God-given opportunity. I'll serve with utmost dedication, with 100% commitment. Because even my predecessors have kept a very high expectation. Last 2 years we had a corona. We couldn't have much programs physically. Majority of the programs went on virtually, and I think members are looking for more and more physical programs, because in physical programs, gaining the knowledge and fellowship will be meeting one among them. It will be a fantastic place to meet members and students. That's I think members are eager to wait for physical. It's my opportunity to now that physical sessions are started. So with this, keeping that vision, I have made some plans. I don't think so I can put it across everything in my PPT, but some vision what I have, I'll present it through my PPT. The theme of the year is endeavor to evolve, engage to excel. Jnana Vikasa. Endeavor to evolve and engage to excel. Committees for development of professional and professionals. I am planning to have many committees like direct tax, indirect tax. Apart from that, CPE committee, Indes committee, and so many other committees, even for SICASA, for the development of profession and professionals. We are all doing this from continuously, but even we have done also, we need to strengthen wherever possible. I would like to have a committees, and we have 9 members of team, and externally lot of chartered accountants members associated with the branch. They are also eager to support. Even for example, if I say for the coaching class of students, branch is giving his coaching class to intermediate and finals, but we need to strengthen that more and more, because our fees, branch fees is compared to any other private institution is very reasonable, and we have a very good faculties for teaching. I need to strengthen. I want to take into confidence of senior members and have a permanent committee, whether any chairman comes and goes, but that committee should exist. They should guide how to carry on those committees for coaching class. It is to be strengthened, and more students should get benefited. And also some of the classes I want to record and upload it in our website so that it will be beneficial to the students. As I said, indirect tax and direct tax and Indes committee and some other core areas of, because the practice dimension has been changed rapidly. The traditional practice, we won't be continuing anything. We can't enjoy that practice, and we cannot achieve what we want to achieve. We have to abreast ourselves what are the latest things is happening, because lot of developments is happening in tech aspects. You can say RPA, because lot of things, country is going from 3 trillion to 5 trillion and 10 trillion, and same way traditional practice also is decreasing. Lot of things is going on digital, RPA, AI, blockchain concept, so many other concepts. I want to have those kind of topics, workshops, seminars on that, so that it will be beneficial to our members and students. Next, sound mind in a sound body. We need to be physically fit so that we can perform our duties well. Once after we coming to practice, in our busy schedule, we will forget to our regular activity, taking care of our health. We have to invest at least 1 hour. Yes, time is money. That time, 1 hour of time, we have to invest in our sports activities, and we need to involve in sports activities. That's why I want to have a regular sports competitions for the members, so that they will be active, they should be interested, they may continue that. As our past chairmen continuously doing a extraordinary job in doing a lot of career counseling. Last year almost 25,000 students have been reached through our career counseling. So I'm going to continue that career counseling program, because one information says that joining CA course from the students, it has been little bit reduced for so many other reasons, but we have to aggressively do the career counseling and reach Mofessel candidates, students also, and guide them to how to do CA, so that many students can join and get that benefit. Empowering young CAs by conducting hand-holding sessions, workshops and other advanced topics. As I said, lot of audit process itself is going in automation. Routine audit has been gone, RPA, AI, whatever told. On those kind of topics, I want to do a workshops seminars on that, more and more hand-holding session for the young chartered accountants. Innovate and excel. Bangalore being the technical hub and startup hub, there is lot of opportunity for technical audits or something like data analytics. What I said, there is the huge opportunity on that. Majority of the audit automation and software tools introduced for the audits done by the non-CS, taking the help of CS, but if CA himself involved, lot of opportunities are there. I want to look on that and have a programs on that. Know your department. I want to have more and more interactive sessions with the government department like income tax department, GST or any other departments, and have a meeting with industry leaders. What is the industry expects from the CS? How we can resolve? So to have that, I need to do a lot of these kind of programs. Knowledge is power. Strengthening CP chapters. Centers including those are in industry, decentralized CPA centers. Even our past chairmen also planning to have, because Bangalore is grown leaps and bounds, having in one center for all people coming for CP, this thing difficult. Decentralized CP we want to do, and some of the CP chapters in industry we need to strengthen. It is not active due to major, so many reasons. I want to strengthen that, and we want to have a decentralized CP chapters. Be connected to market. Industry specific seminars we want to conduct and interactive meeting with industry owners, and some of the trade bodies and associations are eager to have a program jointly with the CA Institute. I would like to do that for the benefit of members. Office administration. What now we need to strengthen the members and students' grievance has to be resolved in a swift manner. We need to strengthen that and train employees also on their skill development. To lead, we need leaders and leadership skills. For that, I want to conduct more and more leadership programs. Excursion, evolve and recreate. Generally, sitting in the same CP chapter, CP centers, sometimes we feel bored to listen to the topics. While learning, we want to go to the outside places. We want to have a regional residential refresher courses. I planned more on that also. Need of the hour, we want to have an annual CP membership scheme that we want to implement, and implementation of biometric attendance for CP programs as per HO guidelines. This building almost 30 years is over. Now we got a renewal. We need to renovate. So that's why we are planning to create a committee, form a committee and renovate the entire building with the guidelines of and coordination of our CC and SIRs members. Key aspect is brand building activities. We need to do a lot of brand building activities, and we want to put a statue of our first president, Kapadia sir. To achieve all this, we need your active support and participation. And I generally believe that be inspired, aspire to inspire others to achieve more in life. With this, I conclude my PPT presentation. I once again support all of your supports and blessings for all our future endeavors. Thank you.
Thank you, Chairman. Also showing a light on your action plan which you have planned for the term. Well, I'm here to introduce the speakers of the day. I know that today's subject is revised Schedule 3 and its interplay with revised CARO. And of course, who else can actually guide us on this matter when we have the subject matter's expertise itself sitting on the dais? So firstly, I would like to introduce CAMP Vijay Kumar, who notes actually who doesn't need any introduction, as we all are aware, but still as a formality, I'm just taking this further. And firstly, I would like to congratulate you on the recent appointment of LIC of India, sir. He's also the member of IFRS Interpretation Committee of IASB. He was also the past Central Council member. He is also chaired in our own institute, Accounting Standards Board, Valuation Standards Board, Digital Accounting and Assurance Standards Board. He's also been vice chairman earlier in Expert Advisory Committee, Financial Review Reporting Board, and Committee on Accounting Standards for Local Bodies. His current directorship include which is LIC of India, Geojet Financial Services, Heritage Foods, Tejo Engineering Limited, SIFI, Singapore, and National Internet Exchange of India. He's also been resource person for accounting standards, IFRS, auditing standards as well. And of course, as we all know, he's been a teacher, and also he's authored various publications, as we are aware. So I would like to conclude his introduction in this small remarks. Also, our second speaker of the day, Mr. Gururaj Acharya, CA Gururaj Acharya. He hails from Temple of Town, Udupi, brought up in Iron City, Bellary, and now is settled in Bangalore. Okay, yeah, he was as okay. Well, with your permission, yeah. Oh, okay. I thought it was my privilege, but since you're insisting on that, I'll definitely take it forward. So we'll start the program by inauguration. We'll inaugurate the program by lighting of the lamp. I request all the dignitary on the dais to come forward. So also the committee members.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 शो निर्मिमाणः तदेव शुद्धं तदेव शुद्धम् तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदुन्नात्यति कश्चन नान्यति कश्चन एतद्द्वैता 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 एतद्द्वैता
Uh, I would like CA Kota Srinivas sir to address the gathering, or as we all are aware, he is a Central Council member.
Good afternoon, members. The dignitaries on the dais, the incoming chairman, the chairman of Bangalore branch, sorry, not the incoming chairman, the chairman of Bangalore branch for the year 22-23, Srinivas T, immediate past chairman of Bangalore branch, BT Shetty sir, the two speakers of the day, CA MP Vijay Kumar sir from Chennai, CA Gururaj Acharya sir from Chennai, the regional council member Geeta, the newly elected secretary Pramod, and all the other managing committee members and members and students present here. I'll not take much of your time. I only congratulate the outgoing chairman and his team for a wonderful tenure of 1 year as the chairman of Bangalore branch. A big round of applause to. And let me wish all the best to the new committee, the chairman Srinivas T, the vice chairman Divya, secretary Pramod, the treasurer Manjunath, and Sikasa chairperson Kavita, and other managing committee members. All the best for your tenure, not only for this year but for the entire tenure. I'll be there with you for whatever help you require. You can count on me, and I'll be there supporting all of you. With these words, let me complete my address. Before leaving, I would like to request the immediate past chairman, BT Shetty sir, to administer oath for the current chairman.
அவர் தெரியா Yes, sir. Let me read.
I, Srinivas T,
Do swear in the name of God,
do swear in the name of God,
solemnly affirm that
solemnly affirm that
I will bear true faith
I will bear true faith,
and
allegiance
to the profession of chartered accountants
to the profession of chartered accountants
under the Chartered Accountants Act 1949
under the Chartered Accountants Act 1949
as by law established,
as by law established,
that I will uphold
that I will uphold
the integrity of functions
the integrity of functions
as prescribed in the said act
as prescribed in the said act
and the Chartered Accountants Regulation 1988
and Chartered Accountants Regulations 1988
for the benefit of the chartered accountant profession.
chartered accountant profession,
I will faithfully
and I will faithfully
and conscientiously
and consciously
discharge my role as the
discharge my role as the
chairman of Bengaluru branch
chairman of Bangalore branch
of Southern India Regional Council of ICI
of Southern India Regional Council of ICI
for the term
22-23
22-23 without fear and favor,
without fear or favor,
affection or ill will,
affection or ill will,
that
that
I
further I, Srinivas T,
solemnly affirm
solemnly affirm
that I will not directly
that I will not directly
or indirectly
or indirectly
communicate
communicate
or reveal
or reveal
to any person
to any person
or persons
or persons
any matter
any matter
which shall be brought under
which shall be brought under
my consideration
my consideration
or shall become known to me
or shall become known to me
as the
Chairman, Bangalore branch of Southern India Regional Council of ICAI,
except
except
as may be required
as may be required
in due discharge of my functions.
in due discharge of my functions as the chairman.
Thank you.
Thank you.
Thank you, sir. Now I request all the remaining managing committee members to come onto the dais. Yeah, maybe you can stand here. You can also go there. So wherever you have got the positions, you can tell. Otherwise, you can say as member of committee. Okay. I can tell your name. Do swear in the name of God, solemnly affirm that I will bear true faith and allegiance to the profession of Chartered Accountants under the Chartered Accountants Act 1949 as by law established, that I will uphold the integrity of functions as prescribed in the said Act and Chartered Accountants Regulations 1988 for the benefit of the Chartered Accountant profession. And I will faithfully and conscientiously discharge my role as the of Bangalore branch of Southern India Regional Council of ICAI for the term 2022-23 without fear or favor, affection or ill will. Further, I solemnly affirm that I will not directly or indirectly communicate or reveal to any person or persons any matter which shall be brought under my consideration or shall become known to me as the of Bangalore branch of SIRC of ICAI, except as may be required in due discharge of my functions as the. Thank you. Thank you, Chairman.
Thank you, Kota sir. Now I request Ms. CA Geeta AB, Regional Council Member of ICI, to address the gathering.
Dignitaries on the dais, our two speakers, CA MP Vijay Kumar sir, CA Gururaj Acharya sir, and the incoming and new chairman of this Bangalore branch, CA Srinivas T, and our immediate past chairman, BT Shetty sir, and our one and only Central Council member from Karnataka, CA Kota Srinivas, and other office bearers and newly committed members of this term. And my dear members, happy afternoon. It's my privilege to be part of this auspicious day to present here and address and congratulate the incoming and outgoing team. I don't want to take much of your time. I know you people are eagerly waiting to hear from the two gurus of today's. It is one guru, our teacher, and most of the students are here of MPV sir, and yet another guru. He is popularly known as our guru for inaugural sessions of all our programs. Whomever, whatever committee takes over, first Gururaj Acharya will be there. I think it got started with my team or my previous team. So we call him as Guru of our Karnataka, Gururaj Acharya. So I don't want to take much of your time. Just briefly, I'll congratulate our outgoing team and incoming team. First, I would like to congratulate the outgoing chairman, B.T. Shetty sir, for his selfless efforts, for conducting various programs, various initiatives he has taken, not only conducting CPE programs, but also other than CPE programs. Usually branch concentrate on doing CPE programs, but Bangalore branch has become challenge to many other branches in South, doing various programs. In particular, it will be beneficial for students and members and society in general. He has taken so many initiatives. In that row, I could just mention about the faculty training program for commerce faculty and career-oriented program. For the final year BCom students, really it was a welcoming measure and so many members appreciated, and even one of the member, I was also in the queue to get the students to get recruited in our office. And the coaching class faculty meeting, because he often calling the meeting of the staff and faculty members to visualize, to improve the quality of the coaching classes, and he was taking suggestions from it, and accordingly he has given free hand to all committee members and all faculty members to take it further. So in that way, really I appreciate sir, B.T. Shetty sir, under your chairmanship, you have set a great milestone to this new team headed by Srinivas, but I am sure Srinivas with his young and energetic team members, he definitely crossed that milestone mark. I take this opportunity to remember, my colleagues in the committee, whomever I served with, they have completed their 3 years, their third term in as a committee members, managing committee members of Bangalore branches. The first is Shivaram Bhatt, chairman, and CA Kore, yet another immediate past chairman. Those two people were completed with today. They have completed their tenure as managing committee members. And Pampana, he was ex officio member of Bangalore branch, and I served with him for 9 years, 3 plus 3 in Bangalore branch and 3 more years in SIRC. And Panindra, he also completed his one tenure and he couldn't go further. So I wish them wholeheartedly all the best for all your future endeavors. And once again, I wish the new committee, I wish you all the best, and whatever help, whatever guidance, and whatever mentorship you need, we are all with you. Not only me, and the entire Bangalore branch and all members are with you. Thank you.
Thank you, ma'am. We'll have a small felicitation program to our outgoing chairman. I request dignitary on the dais and also the managing committee to join us.
as we are waiting for the Mysore Peta, it is coming from Mysore, as I see. Let us make good use of this opportunity to congratulate. The Mysore Peta is one thing, but then I think BT Shetty, you did a class program for 21-22. I have been watching Bangalore branch growing over the years. Every year, MPV sir, the Bangalore branch has been blessed with some of the best chairmen. I see some of the past chairmen here. Prakash Chandji is here. Shravan Gurdur is here. And then was Geeta. All of the leaders, Kota Srinivas, they are all leaders from Bangalore. We are blessed in Bangalore to have very good leaders who have devoted their time. I mean, I always say, hats off to the people who have supported you, especially your office and more than anything else, your life partner and your children. They must have really missed you in this year. Same happens with all the office bearers. I also like to thank specifically Mr. Fanindra, although he's sitting there. No, Geeta mentioned that he did not continue further, but I would say maybe you should. Maybe he's taken a break like MPV. Although we wanted to see MPV as the president of the institute, I'm sure. Also, MPV sir, I would like to say, everybody was congratulating you for becoming a director in LIC. But I would like to say, I would like to congratulate LIC and all the future shareholders of LIC, including me, for electing or rather nominating one of the best professional in India I would not say the chair is adorned with you. I mean, it's not the other way around. So thanks for accepting that on all of our behalf. Now I think we can go ahead with the honors.
Thank you, everyone. Let's continue with the technical session, and I propose a vote of thanks. So over to the speakers of the day.
I thank, it's my privilege to give a vote of thanks to this inaugural session. I thank MPV sir, Gururaj Acharya sir, even their busy schedule, they came and giving this technical session. I thank MPV sir and Gururaj Acharya. Give them a big round of applause. I thank Kota Srinivas sir and Geeta madam and BT Shetty sir. Thank you. Now we will move to technical session. Over to you, sir.
I did not talk about the incoming chairman. Where is he? Yeah, he's behind the curtains. For a reason that the incoming chairman's role for the year will always be difficult because the standards set by the outgoing chairman and the outgoing team would always be high. So we are all with you. So that will make your term easier. So there are all stalwarts. I see Mr. Manohar Gupta here, whom I call as the Bhishma of our profession. I see Ravi Prasad and all stalwarts. We are all there with you to make your year fruitful and making it maybe less painful. Okay. I always say that, sir, you were also part of that. You were all the current assets of our institute. The speakers, I always say, are the fixed assets of the institute. And MPV, for a change, was always a fixed asset and a current asset. And this time he chose to be, no. He is definitely tangible. I mean, a conversion of a current asset to fixed asset. That was the new terminology. But then the entire team, I can say this time we've been given two additional members. And apart from two people whom I know, Srinivas and the wisest chairman that we can have, Divya, all the other 7 members are new. And that means we can get a lot of new inputs. I particularly like the know your department. I mean, we always have been now forced to become faceless. I think knowing them on a face-to-face basis is very important, which probably gels with your last slide of brand building. That goes hand in hand. While we need to know them, it is, I think, very, very important for them to know us. What are all the contributions that we as chartered accountants are doing? So with that, I think that is one thing which every month maybe we must get at least 1 or 2 people from the department to interact and get going. Thank you very much for giving us the opportunity. Both me and MPV are in a way classmates. I'm sure Vijay will tell that in a better way. We are classmates. We passed CA together in 1992, and this is one occasion where only I and him are sitting on the stage. Okay? So although we have shared the dais several times, but this is the one time where I'm not that much, what should I say, sir, nervous, because I have the support of the textbooks with me. So having said that, today's topic, we are talking on, we said instead of he talking and then I talking, we'll do it on a team talk basis. He will talk about the macros and I will cover the micros. And then as I'm covering the micros, he is at liberty to intervene and add his expert views. And for that matter, we have, sir, I always do this particular session like what we are doing today with Manohar Gupta, sir. He's Manohar Gupta. They say, what is comparison to Manohar Gupta? Manohar Gupta is comparison to Manohar Gupta. That's it. So that is the type of person he is.
I look at his humility. He comes here to.
Absolutely. Just to see if we are making any mistakes and then tell us aside that, these are the things which you need to improve. We are fortunate to have Manohar Gupta and Ravi Prasad. He's also sitting at the back, although I wish that he sits in the front to add value to us. And now I would like to go to MPV for the macros and your opening remarks.
Okay. So thank you, Guru, Raj, Acharya. A long time a friend. A long time means probably I connected with him maybe 6-7 years back. And in our conversation, typically you tend to ask which year you passed and things like that. So that's it. We got to know that both of us did our CA together in the same period of 89 to 92. He passed intermediate, the same attempt I passed. And I passed CA final, the same attempt he passed. Both of us, of course, first attempts and rank holder. So I was also privileged to be in the same list in which his name appeared as a rank holder. So congrats, Gururaj, for the excellent work you do for the members of the profession across the country and more specifically to the Bangalore branch. What more love than the fact that every new managing committee wants to start off with your blessings. I think that's the most somebody can honor. And I think I'm happy that I'm associated with you so closely. So hearty congratulations to, and for the participants who are listening to us on video, apologies that we consumed a little over an hour for the new team introduction and all, but some of these are very important for the very simple reason that a large institution like ours, which is about almost 4 lakh members, 3 lakh 50, whatever number, and so many complexities associated with the profession, is run on a crowdsourced leadership model. The entire leadership of the institute is in a crowdsourcing model. We don't have full-time paid leadership in the institute. So there's crowdsourcing of leadership right from the root level, branches, regional council and the central council. And it is important to give the new leaders the confidence that we are all going to be with them. It is equally important to recognize the good work done by the leaders who have contributed and have demitted their office. And more importantly, to inspire a new set of people to come and occupy leadership roles in the institute in due course. And it's for this reason that we spend this 1 hour of your very valuable time, and thank you for giving your time for this. So congrats BT Shetty and your team for the excellent work done. And I have been part of a couple of programs and you have done it so well. And Srinivas, Divya and team, best wishes to you. As Gururaj said, the predecessors have set such high standards, but important for you to set a much higher standard for your successor. I think it's not about reaching the standards of your predecessors, but setting much higher standards for a success, which is more important. And I'm sure that you and your team will do it. Hearty compliments to Srinivas in his absence. Best wishes to him for his performance or role at the council, and compliments also to Geeta on getting re-elected to the SARC, and hearty compliments also to Pannaraj on becoming the vice chairman of SARC, again from the region, and should get elevated to the role of chair next year. Just a couple of opening remarks relating to the installation before I can get to the topic per se. Pardon me if I sound a little negative, but accept me as it is. Accept me as it is. And when I say it with a lot of genuineness and with a very positive and constructive instinct. And this applies to Srinivas and his whole team. And if the whole team can keep the mobiles aside, so that the participants also can imbibe that culture over time. So as far as the branch institute is concerned, I see institute as an intellectual body. I don't see it as a society or an organization. I see it as an intellectual body. And the status of our profession is directly proportionate to the quality of intellectualism which we share as far as our professional matters are concerned. At a point in time when I was in practice and outside Chennai, my first office was in Bangalore. And I used to look at the Bangalore branch with a lot of envy those days. I don't want to tell which years it is. Those are periods when the Bangalore branch used to come out with some exceptionally good publications. Whether you call it seminar material, whatever material. And those material also used to get hosted. And I know for a fact that members across the country used to access that particular material. I would request Srinivas and his team, even though it's not part of the presentation which was shown, that you should have as part of your agenda, and they're very good members in Bangalore branch. And Bangalore is the most happening city in the country, be it technology, be it startups, be it manufacturing, so many things, endless. It's the most happening place. And in terms of knowledge, there's so much available here. It's important that you should contribute to the profession at large by taking the benefit of members here in terms of coming out with some publications and making it part of the website of Bangalore branch, so that members, whether it is from Guwahati or from Gurgaon or from Tirunelveli, can access the website, and members there should feel that if I want to know something good on international tax, let me first go to the Bangalore branch website and search for it. If I want to know something about how data analytics is to be used for audit of a SME, I should first go to Bangalore branch website and see. So that kind of a leadership state, you should bring it. And I would say, if I can dare to say, that in your entire list of to-dos, this should be the first of it. And I'm sure all the members here will acknowledge that when it comes to most, what should I say, requirements of analytical knowledge, whether it is on accounting, audit, tax, or company law, many of us, beyond our institute journal, pardon me for using a private organization name, we would go to the BCA, Bombay Chartered Accountants Society, look at their journals or their website for information. If a body like BCA can produce so much of technical content, and if their seminars can get closed in 1 hour's time, only for the richness of technical content, no reason why a branch as strong and with very high quality members like this cannot produce that kind of technical content. So I would encourage both Srinivas and his team and all the members here and listening on video that please participate in this, because the benefit of the brand will come back to us, because the more the society sees us as a very intellectual set of people and intellectual organization, they will start respecting us much more, which is what we seek in Maslow's hierarchy theory. Once your basic needs are met, you would like people to respect you. So that's what all of us crave for. And I would like all of you to contribute. One person cannot do. And I'd request the next chairperson and the team thereafter to continue this endeavor. The second point which I'd like to mention to Srinivas and his team and all to the members here, of course, there are people like Mr. Manohar Gupta, Gururaj contributing in FRRB and all. But on the exposure drafts of the institute, whether it is accounting, ethical standards, or the audit standards, I find the contributions coming from here, again, pardon me for being fairly transparent or a little negative on this, the contribution has been negligible. For a branch of this kind of talent available, every exposure draft of the institute, we should have received at least 7 or 8 critical constructive remarks. And in standard setting, which ultimately becomes the basis for our practice and disciplinary provision and the way society looks at us, the robustness of standard setting is based on the quality of comments which come in the exposure draft. I have been associated with the International Accounting Standards Board standard setting process last 6 years, and take it from me, for one single standard, it almost takes 7 or 8 years, and there's extensive research and interaction and comments which are received and deliberated upon. Because each of us have different exposure, so each paragraph of standard, when each of us read, we read it little differently, apply it differently, different industries, different sizes and all. I would request the incoming committee, all of the 9 members, for them to be personally involved as well as have the involvement of all the members of the Bangalore branch in responding to comments invite from the institute. So we invite comments for international exposure drafts as well as the Indian one. I'll give one very small live example which will touch each of you. All of you are aware that we have audit standards, and we have one set of standards on auditing for all size of organizations. Whether it is a 1 lakh crore revenue company, or it is a company which is 20 lakhs revenue, it is the same 46 standards which are available, which are there, the same audit standards which are applicable. Thanks to initiative of the Institute and Institute's efforts in International Audit Assurance Standard Board, we have convinced them about the need for having a separate set of standards for what is called small and less complex entities. Just like IFRS, we have IFRS and IFRS for SME, we have convinced them. And in parallel within the Institute also, we have developed them. We issued an exposure draft January 2020, not much comments, and it's parked there for a year. But IAASB, which is part of IFAC, and Institute is part of IFAC. They have now, after a lot of work, issued what is called Standards on Auditing for Small and Less Complex Entities. It's an international exposure draft already published. And all of us deal with non-listed companies. Almost all of us deal with audit of non-listed companies. Who else can be better to give inputs on whether those exposure draft is good, adequate, inadequate, etc. And when IAASB sees that there are 70, 80 members commenting on an international exposure draft, that's how India gets recognized globally. It does not get recognition by chest thumping that we are second largest in number and all. That doesn't get us anywhere. It has to happen by contributing at a global level that thought leadership, improvements in various technical matters. And those exposure drafts are published by our institute in our institute website so that we collate comments and pass it on there. So I would request that all of us who are so deeply connected with the institute and care so passionately about the stature of the institute and its global recognition, that we should contribute in the international standard setting as well. And please note, contrary to what many think, and I'm ready for a big debate on this, contrary to what many think, that we follow international standards, whether it is audit standards or 46 standards or Control C, Control V of the corresponding international standards, subject to small edits here and there. Our accounting standards, Ind AS particularly, is again same. So many say we are copying the international standards, but please note, the moment you are involved in the international standard setting process, and that's what the Institute has been doing over time, the more you involve in the international standard setting process, that standard becomes our standard. It is ours because you were involved in developing that particular standard. And as you contribute more meaningfully and your voice increases, so that becomes our standard. So as a sixth largest GDP now, and maybe 7-8 years from now, third largest GDP, obviously we have to be international. It is important we have to be global. So we have to lead the world rather than say that I will do isolation, this, that, and things like that. That will not work. It will not work. So my request to Srinivas and his team, please ensure that every exposure draft, there is a study group with relevant experienced members. Have a good meeting. The CPRs for that. The CPRs for all of those. Even if you write a letter to Institute saying that these are my comments, you get CPRs. I don't know how many of you are aware. If you read an exposure draft and write letter to Institute, there are CPRs for that, because that is a more qualitative learning. So my request is please participate in the exposure draft process. And as Gururaj mentioned, that meeting department is very good. I'll give you one more reason why you should do. And I would request members to participate in those events, because when those officers come, it's important that we should give them an elevated experience of the profession. Right from the time the program starts, the way we behave, everything, we should give them an elevated experience. I'll tell you my experience last 6 years. Almost everyone who is sitting in the North Block, South Block, whatever block, everyone who is now 50 plus there, during their 30s, 35, 40s, have worked in Bangalore, Chennai, Hyderabad, Hubli, Belgaum. They worked here. And their view of the profession has been formed 20 years back. So today, when you go and speak to them, they are secretary of this department, that department, and you tell we do this, that, we are good, all that kind of stuff. It's over. Damage is already over, because his experience of the institute was 20 years back. So 20 years back, he came to an event. He saw how it happened. He saw the way things were happening, and his experience of the assessments, etc., the way people handled. So all that is so strongly seated in him or her, that now when he or she is secretary of a ministry, joint secretary, additional secretary, you can do whatever. You can stand upside down, you can moderate it this much, but you can't correct that opinion. So it's very important that we should help the department to know our profession better, and we should showcase ourselves well to them. So today, if we tell ministry is against the profession, they are not this, that, over. The damage is 20 years back. Now what we do will affect 20 years later. So all of them elevate and occupy those positions. So my request is, programs wherever you have a commissioner, additional commissioner, whatever designations they are, even the people from the political leadership, ensure you are present in good numbers, ensure those programs are very well conducted, decorum. The message should be such that I've never seen such a great organization. That impression should be there, and that impression will help 15 years later, not in the next 6 months or 1 year. That kind of thinking is very important. So that's a very important activity, Srinivas. And I would request that managing committee has a 10% role there. The remaining 90% comes from all of us here. Those programs, please attend in reasonably good numbers. Give those people an elevated experience. Let them feel that we respect them, we care for them, beyond the immediate transactional work which some of us might get introduced to them. Beyond that, give them a better experience. So these are some thoughts I have, which I thought I should share on this occasion. So if I've taken a little extra time, apologies for that, and let me now come to the topic per se. So as far as this CARO 2020 and Schedule 3 revised is concerned, both of them are a response of the government, a reaction of the government to what has been happening in the area of corporate reporting. So these are things which the government has responded. And when CARO 2020 was developed, the process they followed was a series of meetings, multiple meetings of all the ROCs and regional directors, where they shared their experiences on the quality of financial statements and their difficulties in conducting inspections and ensuring good governance, and also the way the monies get dealt with in terms of transfers and things like that. So the kind of observations they have had, those observations were so many that when CARO for those who can recall CARO when it came after the new Companies Act 2013, it was an abridged version of the earlier 2003 CARO. The earlier 2003 CARO was a long one, and when the new government came in, they came in with the mantra of less government and more governance, all those kind of nice quotations. But they discovered that that formula was not working. They discovered that while we reduced our government involvement, the CARO is a very short one. They discovered that governance only deteriorated. And hence, whatever you see today as CARO 2020 is a response to the product produced over the period. The product is financial statements. That product financial statements, along with the audit opinion, did not meet the expectations of even reasonable governance. So while all of us might think we are doing a good job, our clients, we are doing the best and all, look at the statistics of IBC cases, which is largely unlisted entities, and the status of other entities, which all of us know in the media. All of these cases, the quality of financial reporting is still a journey where a long journey is required. Now, it's very important, all of you, to recognize the following when it comes to Ministry of Corporate Affairs. Please don't think that I'm batting for them, but I think it's important for us to understand why this Schedule 3 or why this CARO is coming. And my experience always has been, when someone understands why something is there like this, compliance becomes mandatory, and more importantly, it becomes qualitative. Once you understand why it is there, you start complying with it much better. So if you look at the MCA website, they talk about two things as their mission. One is empowering business. That's what they talk. It's there in the public domain. It's in the website. Empowering business. That's what they say. Our objective of MCA is empowering business and protecting investors. These are our two objectives. So anything and everything they do, you can see that it is either towards empowering business or towards protecting investors. You will see that everything will fit into one of those two. Secondly, they have like Srinivas had this tagline, endeavor to evolve and engage to excel. I hope I told correctly. Yeah, engage to excel. They have this tagline which they talk about, that MCA is a regulator, integrator. They want to integrate various aspects of corporate functioning, facilitator and educator. So, and in MCA, I have my experience over the last 6 years is they have never hesitated to facilitate. They've never hesitated to facilitate. All it required was a right kind of articulation and integrity of what you are seeking to be facilitated. They've never hesitated. So if you look at the Companies Act 2013, amendment after amendment after amendment after amendment, some of them were to tighten the gaps which they observed, and good number of them were for facilitating. And even now as we speak, before a demitted office, there are few activities they had in their table, which they are looking at how we can make it little more easier for businesses. So they have this 4, like here 2 bullet points, there are 4 bullet points. Oh my God, you are too good here. So our batch is like that, sir. You should clap for that at least. For the batch, okay. For our batch, 92 May. Okay, so now. And on financial statements and audit report, I've shared this earlier and it's a repeat. Some of you might have heard it multiple times from me, but please listen to it once again. As far as financial statements and auditor's opinion thereof is concerned, we all need to acknowledge that it is a communication. Balance sheet is a communication. P&L is a communication. Cash flow, notes, audit opinion. Like each of us in our personal life, expect any communication we receive. Communication we receive from family, from our office staff, from our clients, from our peers. We all want the communication we receive to be truthful and complete. We all have that expectation. So when all of us want communication we receive to be truthful, we receive to be complete, of course, the recipient of our product, somebody who is consuming our product is the financial statements, our product is the audit opinion. That person who is receiving that product also expects that it should be truthful and complete. And it's very important that once we acknowledge this, and you will start observing that the quality of professional work you do, the professional satisfaction you achieve will be on a much different plane compared to probably currently what we have. And all of us know truth is very difficult to tell, particularly in the context of a commercial world, etc. But let me tell you, it's actually very easy to tell. It's very easy to tell because when you communicate anything other than truth, substantiating that is very difficult at a later stage. But when you are habituated to only telling the truth, it's so very easy to substantiate it at any time. And it is a direction. We will witness that generational shift. I am very confident that we will get there. I'll just start with one more opening observation. As a general observation, again relevant in the context of the revised Schedule 3. Founder President of the Institute, late Sri G.P. Kapadia, and I'm happy Srinivas is going to install his statue. And I've asked every branch to have a statue of that gentleman, great gentleman. And I learnt about him only in the last 6 years. So very honest, I did not learn. And if there is one thing I'm very thankful about of being in the council, is the opportunity to study the history of the institute and understand this gentleman. Way back 1949 onwards, the speeches he has delivered and the thoughts he has delivered are true even today. And one of his quotes, he says that every learned profession should develop a sense of social obligation, and it is more so in the case of accounting profession. Mark this is 1949, and it's relevant even today in 2022. And when he talks about every learned profession should have a sense of social obligation, it does not mean, and I'm very, very candid on this, as I am always, it does not mean planting trees, distributing water, this. No. That there are different organizations to do. As a profession, the sense of social obligation we should have is the quality of professional work which you do, which others are relying upon for decision making. Investors are relying upon for decision making. Lenders are relying upon for decision making. People talk about NPAs of some 12 lakh, 13 lakh crores, some big number. Now that 13 lakh crore NPA loss, Who is bearing that loss? Not shareholders of the bank. Not shareholders of the bank. The entire loss is borne by the society, public at large. The concept is very simple. Very simple. If bank is lending at 8%, from 8% deduct profit margin, 0.25%, deduct 1.5% for expense of management, then deduct bad debt provision, balance is interest rate for hard-earned money of society, interest rate 4.5%, 5%, 5.5% and all. And we all know that inflation rate is higher than the deposit rate, which means the society is actually losing out on principal year after year. So if that provision for bad debts, if bad debts write off, instead of 1.5%, if it is 1%, if it is 0.5%, that little extra interest would have been available to the public at large. Or lending could have happened at 1% lower, making more projects viable, creating GDP, employment, etc., etc. That is sense of social obligation. So to ensure that businesses conduct well in a sustainable manner and there's no loss suffered by any section of society is what is called social obligation. Government does not lose out revenue on tax, in quotes, planning, whatever. That is social obligation. So with these opening remarks, let me come to the Schedule 3. As far as Schedule 3 is concerned, 24th March 2021, the revised Schedule 3 came in for all the three divisions 1, 2 and 3. And this Schedule 3 revision is directly correlated with CARO 2020. So it's an offshoot of CARO 2020. And I like Gururaj when he did the title of interplay between these two. But actually both of them are one single, document, theme, whatever you might say. When CARO 2020 came in, the government had so much expectation on what all observations we have to do. Thanks to institute support, thanks to institute's effort, we represented to the MCA saying that, look, asking auditors to comment on those exhaustive provisions of CARO without holding the preparer responsible is not fair. As auditor, our role is to opine on what is there. Don't ask us to tell something more. So first ask somebody to give, then we will respond on it. So whatever you see in revised Schedule 3, the incremental clauses, almost every clause is connected with the amended clause or subclause of CARO 2020. Every clause you can have a sync. You can actually do a one-to-one tie-up. And in the new CARO, which is a fairly tough one, most of you are practicing community here. And I've shared this multiple times in every opportunity I've got. Even if I speak on a program on artificial intelligence, I'll still talk about CARO for a few minutes because that's the kind of impact it will have when you actually sign your audit report in June, July, August 2022. Until you sign, you actually don't know the impact of that. I'll give you one simple clause. I'm sure Gururaj will deliberate in detail later. A clause on working capital borrowing above 5 crores. Whether the stock statement filed with bank is tallying with the books of account. So for unlisted companies, we don't close books of account during the year. Many of them update it at convenience. And 5 crore limit is peanuts. In today's world, 5 crore is nothing. The last compromise we worked hard was make it applicable listed companies. We said make it 500 crores. Nothing worked. Nothing worked. They stuck to this clause. I don't know how you are all getting ready, but at least I am clueless even now. I am clueless even now. Because for an unlisted company, 30th June, unlisted company, unless you do cut-off procedures, you will not know the stock, and some cases receivables are there for financing. You will not know what they are. So people have filed whatever statements they could take from tally or whatever accounting package. They will not tally with the books of account, and there will be reconciliation. How do you show that reconciliation? And please stay warned in advance. Don't complain later. Once you have filed your 21-22 financial statements, within 9 months, expect unsigned computer generated notices to come saying that these are the 20 observations in financial statements. Please explain. Will come. MCA is developing a tool which will read the filed documents, and auto-generated mails will come out saying that explain. So there are so many areas which can be called for such explanation. I'm sure you don't want your client to ask you tomorrow why this notice has come, why have you not advised earlier and all. So they are pretty tough ones. But I see CARO 2020 as a powerful tool in the hands of auditors, very powerful tool, just like SA 701. In fact, I'm a huge fan of SA 701, and I would request that all of you should use it even for unlisted companies. It is mandatory for listed, but you should use it for unlisted also. The standard allows you. So what CARO 2020 would do is, it gives you an opportunity to tell the government that, look, you are expecting all this information. Look, here it is. Tomorrow, nobody can come and hold you saying that you did not do your job, you did not tell me. That question doesn't arise. All of us keep talking about expectation gap. Now the government is telling, this is my expectation. Give me this. We all kept crying expectation gap. You are expecting more than what we are doing. We are doing work as per our standards and nicely signing as per SA 700, that copy paste we are doing and all. But you want more than that? Government says, yes, I want more than that. Here is the list, please give. And if any of us thought it is going to stop with 47 subclauses, I'm sorry. They are testing. If they don't get confidence, they are ready to increase. And they are also considering what is equivalent of what we do for bank audits, LFAR, long form audit report. Even for regular joint stock companies, they want to try it out. So they are getting ready for that. So this is one opportunity for us to tell, let's stop here, not beyond. I'm telling you why we should stop here. And I wish in my lifetime, CARO 2020, CARO is withdrawn, because globally, there is nothing called CARO. Globally, there is nothing called CARO. It's only the SA 700. Only here, you report on 20, 30 other matters. So it is a matter of demonstration or an evidence of government's confidence in us, which will help us either shrink this or withdraw this. And I sincerely wish it happens in my lifetime. But currently, their expectations are much more than what is there in this list. So my request is, please sensitize your clients now. Very simple way to sensitize is, take 2021 financial statements, already audited, signed, draft a new CARO. Ask a senior article student, he or she will do. Draft a CARO 20, CARO for that statement, and show the client that this is how it will look like. You have 40 more days, 8 more days and another 31 days or whatever. So please take steps if you want to avoid some of this. And in Schedule 3, which Gururaj will tell, aging of receivables, payables, capital work in progress, project overrun, time overrun, cost overrun, binami, title deed, all those things are again pretty huge. So those are important ones. And lastly, these changes which are there have all been drafted under some specific headers, both CARO and Schedule 3. Some of it for improving governance. Some of them are supposed to be red flags for the government. We have to raise red flag and tell government, I have told you something is likely to go wrong. It is for you to take action. Third, to improve financial discipline and to ensure solvency. That's the third bucket. The fourth bucket is editorial corrections, like rounding off, using the word total income instead of turnover, some editorial corrections. So broadly, they come under these 4 headers. So this is a quick intro, the quickest I could do on this topic. I'll leave it to Gururaj for the detailed introduction, but I understand all of us have earned the right to have coffee or tea now for 5 minutes. So we can have a coffee or tea, come back, and then have the pleasure of listening to Gururaj. So thank you all.
Back. So we get into the micros of revised Schedule 3, whereas I will be concentrating on the action points that are immediately required from the Chartered Accountant's perspective. I would request MPV to add on to his views, whatever he has from time to time, and also give his expert comments. In fact, BT Shetty sir, in your chairmanship, we already had this program. I remember in the month of April or May, already we had it. But the difference between then and now is that the institute has come out with a guidance note, and my talk this time will be incorporating the matters that have been covered in the guidance note. So the guidance note has been issued in January 2022 for all the 3 divisions. I mean, I will be focusing on Division 1, and Division 2 and Division 3 more or less is the same, just a few incremental there. But the point to be noted, the guidance note itself says, and we also know this, that all companies that prepare either voluntary or mandatory the financial statements should be in compliance with the company's accounts rules for sure, and shall also consider Schedule 3 as well as this guidance note. That's a very interesting, they have to follow the guidance note unless they have reasons to prove that they have a better reason to deviate from the guidance note. Okay. So on 24th of March, it was not only in relation to the revised Schedule 3. Yes, sir. Yes, sir. Yeah. Sir, yes, sir. No, I think that is a camera, you said, no? Camera. Yeah, the mic for the camera, I think. No, yeah.
Mr. MPV, with his mesmerizing logical skills, he has explained very detailed what is for every provision, what is the logic behind that, what is the intention of the MCA, what they are going to do, and all everything. Excellent. It is. I must thank him for his very nice thing. But what I feel is the ground realities. Ground realities what we are facing. Now you said like whatever CARO, the so-called 47 clauses they said. By efforts of the institute, discussions and all like that, what they have done. Schedule 3 also they have amended, same clauses they have brought. But they say, yes, let the management declare that these are the issues and auditors can report. What is the ground reality? Who is preparing the balance sheet? I am talking about the so-called medium and micro and less complex entities. The chartered accountant, who is the so-called auditor himself, prepares the balance sheet. He himself has to give the report. That means he has got to take a double-edged sword and give. And from this context, what advice you give to the members of this?
Gururaj, with your permission. Sir, I am aware of this ground reality. But again, what I respond might appear a little theoretical, might appear a little theoretical, but if we want the profession to grow as a profession, we have to take these hard steps. We are aware that code of ethics does not allow us to do both preparation as well as express an opinion. We are all aware. And over time, what has happened is because of this micro, small, lower end of the medium, the focus on client retention, holding the client, etc., we have tried to do everything. If you look at some of our sister professions, maybe little learnings from there. If you look at a profession like medicine, little specialization, you tell go there, consult. You do that little bit of traffic diversion. And if you take professions like, let us say, a legal profession also, when you go to a senior counsel, you require a junior lawyer also. You can't approach the senior counsel directly. Some evolved practices are there. I would strongly request, particularly the senior members who have been in practice for quite some time, who have been in practice for 20, 30, 40 years, when they are handling clients who are in that category, you give the accounting services to the new members who are coming into practice. Give that opportunity. I know I am sounding a little theoretical, but I also want to say that when I was in practice for 9 years. I did exactly the same thing. Because I was finding, I did it because I was not able to reconcile. I was not able to adjust to that situation where I am involved in preparation as well as this. So moved there. And it was a journey. It's not like I did it on day one. I did it for a few clients and gradually came up. I think, and I would make this request particularly to the senior members who have practiced for 20, 30, 40 years, where that segment of customers, the accounting services, please give it off to the younger members. Let them do it. And you express an opinion on that. The client will have an extra cost of 20,000. Maybe he's already paying me a fee of only 15, 20. He's already paying me a fee of only 15, 20, 25, whatever number. There's an extra 15, 20 to be paid, but I think the client has to absorb that cost, not that he cannot afford it. He's paying it to somebody else for some other purpose. I think that step has to be taken and it will take time. I'm not saying that tomorrow morning onwards, everything will change, but I'm conscious this is there. But one point also I want to highlight to you, which again, I'll go back to what I said on the code of exposure draft comments. When the institute issued the exposure draft of new code of ethics, which is based on the international, and I would like everybody to follow this very carefully. Our code of ethics is Control C, Control V of the International Code of Ethics. But there are few things which we have made it more stringent for our profession than what is there internationally. Internationally, for example, for that micro, small entities, the code of ethics allows both works to be done. With a small difference that instead of calling it as audit opinion, it is called accountant's report. So in our country, we are fixed to the fact that I want to give an audit opinion even for a micro entity. If you want to give audit opinion to a micro entity, it has to be prepared by somebody. If we want everything to be done by one person, then we should tell, instead of audit opinion, we will do accountant report. So once that is done, then this issue will get automatically addressed because you will be allowed to both maintain books, prepare statements, and issue an accountant's report as well. So my view, everything is a journey. We cannot one day get up and say we will be in zone of excellence. My view, over the next 10 years, our country will move in that direction, where for these unincorporated entities, and for the micro companies. And recall there was a paper published last year, huge noise was there in membership and all. So there is that ideation which is happening, and it is likely to happen. It's there all over the world. It's there all over the world. In fact, many jurisdictions for those entities, there's no audit requirement nor an accountant report. So we also have to accept there, and we'll get there, sir. We'll get there. My view, it's a journey. No, sir. I think that's a different discussion to have, sir. A different discussion.
Said true, maybe after a decade this may come. But unfortunately, we are in a transition. We have to suffer this
Every
position.
change will come. Sir,
It
you
is
have
there.
you have lived 91, 92. 91, 92, that liberalization, you have seen the transformation. So we are all beneficiaries of that. So when it was a closed economy versus open, we all benefited, but everybody was skeptical. So whenever change happens, it will come with lots of pains, but when the new normal comes, it will be good, sir.
So what I feel is, because the so-called professional ethics, yes, you are right. As per the professional ethics, I'm giving an audit opinion. I'm not supposed to prepare financial, not it is prohibited. But that is not practically is happening. Now, as you said like that, suppose if I give to junior this thing, the client will not bear the additional cost, but I have to cut my revenue. That's what it is going to happen.
I've said that, sir. I've acknowledged that.
What is
I've not
happening.
denied that. I've not denied that.
No, only thing is like now for CARO applicability,
small-
it is but particular, but certain class of companies not. Sometimes Schedule 3 is applicable to everybody.
Yes.
To align CARO.
Sir, well answered. Good question, well answered. But I would only say that it requires a mindset change, which has an economic cost to it. I think that's what it is. But who should bear the cost? I mean, that's the question. We should bring the fear of the compliance inside the client and not keep it to ourselves. I think that is the difficult part. So we have seen income tax notice getting all its seriousness. But when it comes to compliance of company law, unless the notices keep coming, which is happening, I think the fear of the company law is not that much. And people with the mindset of that, saying that I'm only an unincorporated, I mean, I am a company with family, why should I be audited, etc. They should actually not form a company at all. I mean, that would be the greater question. These days, we are desisting people from saying, why do you want to form a company? Because actually, they also don't know what is a company. They just come to us saying that, please form a company for me. And I think that it is a private limited company and incorporate. I mean, he's saying a company. Then we are now telling what is a company, and we are desisting a lot of people. In fact, some of them we are converting also. Having said that, on 24th of March, there were 4 changes. All of us are aware, books of accounts, auditors report format getting changed. Not only format, the contents in particular, board's report and schedule 3. Now, as far as the date, I mean, there was a big confusion. Now it is very clear that it is applicable from the next year. Next year means the current year. I mean, the financial year 21-22, what we are going to sign off. That is what Mr. MPV was also mentioning, that do a dry run for all the balance sheets. In fact, we were thinking that this dry run could happen from December to March. Unfortunately, up to this month end, we are busy with the GST audits. You know, the year itself has got extended. We would actually request the government, maybe the institute also. Of course, now the current assets have to, you know, the current assets have to make a representation that this 21-22 flag post would actually get shifted to next year because of lack of preparedness from our side. And I mean, instead of saying the profession side, I would say from the side of the corporates. Otherwise, the dry run itself is not possible. Until now, we are still busy with 2021. So 21-22 looks very far off, but it is actually day after tomorrow. I mean, it is like that. So having said that, we need to make a dry run and use the comparatives of the 2021, keep ready using the new format. MPV has already talked about 2003. This is what the numbers, I just put it on comparative basis, 21 subclasses, and in fact, 37 subclasses, 21 by numbers, got reduced in 2015 with that minimum government, maximum governance, or whatever it is. 2016, it came down to 16. and 2020 went up to 20. Went up to 20. Actually, with the subclauses, it is actually 48 subclauses. 48 subclauses for a standalone. If it is with the CFS, it is going to be one more. One more. So that is how the numbers would look like. CARO, applicability of CARO, there has been no change from CARO 2016 to CARO 2020. It is applicable to whoever it was applicable in 2016. So I would not like to get into that. But the definition of small companies has been slightly relaxed as far as the Companies Act is concerned. We need to keep that into mind. Now, talking about CARO 2016, MPV, this is one slide I call it, although it may look very small. But then this is one slide which covers the Vishwarupa of CARO 2016 vis-a-vis CARO 2020. Now, how do I look at it? And it covers what are those clauses which have to be commented from the Companies Act perspective. From the Companies Act perspective, we need to cover about 15 clauses. 15 sections of Companies Act need to be covered under the CARO 2020. Under this particular slide, just for you, let me tell you, maybe this is better here for you to see. Yeah, then you have a good eyesight. You know, you need to have an eagle's eyesight is what they say for a chartered accountant. You have that.
I'll see here only now.
Okay. So having said that, you know how many sections we need to comment on? Section 185, 186, and whatever is underlined, that is the one which has been brought in CARO 2020. Okay. Details of such amounts to any entity and particularly to related parties under 276. Now that is what we were always commenting about: loans, investments, guarantees, and securities. So how much of that is given to the related parties? Anyway, that would have been covered under AS 18. It would have been covered under AS 18. Now a repetition here. Now 73 to 76 deposits have always been there. 148 maintenance of cost records, 42 and 62 preferential allotment, 197 managerial remuneration. Let me talk about managerial remuneration. It has already been there for all companies. We need to comment in the main audit report by virtue of section 197 subsection 16. No, and in fact in FRRB we were saying that public companies are not commenting on that. Since it is applicable, managerial remuneration restriction is applicable only for public limited companies. Now they have dropped it from the CARO, and anyway it is required to be commented in the main audit report for public limited companies. So 177, 188 related party transactions, 192 non-cash transactions, 143.12 fraud reporting continues. But what is new in CARO 2020 is on the auditors commenting in CARO on CSR. CSR until 22nd of January 2021 was an sort of spend or explain in the board report. Now spend or pay penalty of 2 times and spend. You see that? So it's better to spend. Otherwise the penalty will be 2 times the amount of CSR not spent. From 22nd January 2021, it has become very, very serious. And let me also tell you, last 10 days back, we got one more important form called CSR2, which needs to be filed by every company which is required to spend on CSR. Otherwise, there was no mechanism for the ROC to know how much, whether the CSR is applicable and have you actually spent. Now the CSR2 is a document, a form which needs to be filled by before 31/3/2022. By every company, which is for 2021, we need to file it before 31/3/2022. And the form is so detailed that you will get caught. By filling that form itself, you will get caught if you have not spent. That is the mechanism. All these days, in fact, it so happened, all of us know, there is an ongoing project or not an ongoing project. If it is an ongoing project, you need to deposit the money by 30th of April into the bank account, separate bank account, and spend it in the next 3 years. Next 3 years. Failing which you will have to deposit back to the specified fund. Whereas if it is not an ongoing project, the last day was 30th of September, by which you will have to deposit into the specified fund account. Most of the companies, when they came to us for audit, the 30th September deadline had already gone through. So what we have told them is immediately, now that you have to spend 25 lakhs, they had to spend, and they they got to know that from 22nd January it is to be spent. So what we told them is immediately, even if they came to us for audit in the month of November or September, October, we said that you deposit into PM CARES account, and we will see that in case a notice comes, we will reply saying the Supreme Court decision saying that because of COVID from 15th March 2020 to February 2022, they have given a sort of a stay. I mean, I'm not saying that that is applicable to this straight away, but we are only trying to say that if that is applicable for any quasi-judicial matters, it should sort of be applicable here. Maybe we have spent it, but since it was the first year, please don't charge us penalty. But this is a point, a way out that we are trying to say. But we were only thinking that, how will the ROC know that we have spent on a later date instead of a former date and things like that. Now we have to file CSR2 and ask him to give us a notice. I mean, it is as simple as that. So if you don't file, your caught. If you file, your caught. So that's the situation we are in. And this is a new introduction. CSR is a new introduction to be commented by the CARO auditor, the statutory auditor, introduction through the CARO 2020. So fortunately, last year we were not required to comment on this, but CSR2 captures that. Now, CARO other reporting matters. This is what, if you see, very interestingly, again in this slide, MP Vijay, I will tell you that whatever has been brought in red is the ones which have been actually brought in even in Schedule 3. So that is the interplay that I was trying to talk about. The property, plant and equipment physically verified was always there. Proceedings under the Benami Act and details of revaluation. Details of revaluation is brought in 2020, but proceedings under Benami Act brought in CARO 2020 as well as in Schedule 3. Inventory, physical verification, we were always commenting upon. Discrepancies, we were commenting upon. What is brought in afresh, that is what is underlined here. Agreement with the books of quarterly returns filed with the banks. This is what he was mentioning about. Do we really close the books of accounts? Do we do a proper cutoff? I mean, even if you do a proper cutoff, you don't do a proper cutoff. As a statutory auditor, I will presume that on 30th June, I will ask the system to give me a financial statement, and I'll see whether that financial statement agrees. It's better that you do a proper cutoff in case you are actually trying to add values and things like that. Otherwise, it will be, I mean, as he was talking about, when you were talking about, I failed to, I mean, you use the word that I don't know how I'm going to comment. I just put there. Auditors need to be astrologers, especially when it comes to going concern and things like that. So the proceedings under Benami Act, agreement with the books of quarterly returns filed with the banks, unrecorded income disclosed in the IT assessment, far and few, whether properly recorded in the books, statutory dues, repayment defaults, term loan if diverted. This was there earlier. In 2003, CARO, it was there, brought in again, term loan if diverted, where they have been diverted, funds taken to meet subsidiary, associate and joint ventures obligations, and on willful defaulters. All these things have to be commented. That's what we were saying. What has been changed in CARO is what has been changed in revised Schedule 3 is a welcome change, because otherwise I should comment on those without there being a primary responsibility on the preparers of the financial statement. So to that extent, it is a welcome change, but now it will probably amount to duplication, especially if you are doing the same work. Now, talking about the next point, application of funds raised by way of IPO, FPO, Nidhi companies, registration under 45(1)(a) of the RBI Act. I keep telling this in every situation that if you are having more than 50-50 test, the rule of 50-50 test is in case your total financial assets are more than 50% of your assets, and if your income is more than 50, if your income from such financial assets, either by virtue of sale or by virtue of dividends or interest, etc., is more than 50% of your revenue, you may not be an NBFC, but you are deemed to be a NBFC. And for that, there are a lot of requirements. You need to, I mean, as an auditor, comment separately, but before that, you, the auditor, if the company has not asked for the registration, the auditor has to comment on that also. Otherwise, Reserve Bank of India is sending notices to the statutory auditor saying that you have not commented. So very, very serious, the rule of 50-50 test. You may not be an NBFC, but you will be a deemed NBFC in case you are you breach the 50-50 limit. the ability of the company to meet liability in the next 1 year. Now, this is what we were telling based on the financial ratios. Look at this. Based on the financial ratios and other aspects, I as an auditor come to a conclusion that the company has ability to meet its financial obligation in the next 1 year. There was no primary obligation on the company to prepare the ratios. Now, the ratios need to be prepared by the company. Now, based on those ratios, I as an auditor will comment. Now, we'll talk about ratios a bit later. Statutory auditor resignation. Statutory auditor resignation, consider issues, objections of or concerns raised by the outgoing auditors. Now, if you are coming in as a new auditor, this is where it kicks in. Otherwise, it becomes not applicable. Since we are on this particular point, there is an implementation guide on auditors resignation, where the auditors, it has been told by our institute that we should not give us one-liner saying that because of my preoccupation, I am resigning from the company. Or for what, it cannot be a very static type of a reason when we are filing the ADT 3, etc. We need to be very, very specific. It could be on account of a fee not being commensurate with the work that I have been doing, or maybe change of group auditors. We have been talking about that. You want to add something on that? So the point I'm saying is, yes, sir.
Is the query raised by the MCA?
No, whichever way you are caught. The point is, the point that I am trying to say is, let us be very specific and we'll face whatever it is. But let it not be like due to my preoccupation. Very funnily, if I'm preoccupied, then I should not be filing any more ADT ones. Now, maybe because we got rid of him, we were able to file many more ADT ones. Maybe that's a very good one. No, different point of view. Yeah. So new point of view. Okay. New blood, yeah. Statutory auditor's resignation. Internal audit system was there earlier in 2003, again brought in, and cash loss. I think this is the simplest of the question that could be anyway answered. So division 1, division 2, division 3 changes in all the three. If you look into the notification, there are 43 pages. In fact, the notification changing on 24th March, only the schedule 3 is 43 pages. But thankfully, only 11 pages with respect to division 1. Subsequent pages are towards division 2 and division 3. Again, they repeat the entire thing. So that way, although for me in the PowerPoint, it looks like only incremental 3-4 slides. But for division 2, if I have to read, it is a substitution of the notification to change the existing NBFC. Now, this is the gist of the amendment. Yeah.
Just one point on the previous slide, and I would like all of you to be cautious. If you read the first one, accounting standards specified in Companies Accounting Standard Rule 2006, that is amended now. There is no more 2006. There is no more 2006. So when you prepare notes to accounts for 21-22, when you prepare notes to accounts of 21-22, 99% previous year copy paste first paragraph don't tend to read. So this rules now replaced with 2021. So it was issued on, if my memory serves me, 30th June 2021. So the rules are notified under 30th June 2021. So that one small edit, you can inform all your staff so that nobody forgets it. Otherwise somebody will forget and something will get filed, and you will receive a notice for that again. Okay, it is actually a project which was called mirroring project. The reason why it had to be done was the 2006 rules was under the old act, and old act, as you know, is repealed. So it had to get notified under the new act. So when it got notified, there are some hygiene improvements to be done, which we have done. So principle wise, whether recognition, measurement, nothing changes, but there are some edits here and there, they are there.
This is what we were referring to. GAAP comprises mandatory accounting standards as specified under 133 of the Companies Act, read with Rule 7 of the Companies Accounts Rules 2014. Now this has to be replaced with Companies Accounting Standard Rules 2021, as he rightly said. In fact, that was, I think, about 388 pages. Suddenly 388 pages on 1st of April 2021, this notification came. I said, my goodness, again 3-4 days for me. But then fortunately, first page I said, started reading, that was exactly mirroring. So except that 2006 was before 2013 Act. Until such time the new accounting standards came, we were referring to the old. That is the rule 7, which was acting as a bridge. So that bridge is removed and now they have given a direct flyover in that sense. Yeah, on 24th of March, 4 things got changed. One is where they said accounting software should create an audit trail that cannot be disabled. So this was which was to be started from 1/4/2021. We moved it to 1/4/2022. So please be aware that now every company, we have got hardly how many more days now, 30 plus 6 days. So we need to ensure that the accounting software used by the companies have this particular facility of audit trail which cannot be disabled. So whatever reasons, we know this feature has to be built in the software. Schedule 3 changes. Let me comment on the macros again. There has been a requirement, additional requirement. I'm concentrating the major aging of trade payables. We were always giving, for trade receivables, we were giving aging. More than 6 months, less than 6 months. Now for trade payables also aging is required. Micro, less than 1 year, 1 to 3 years, more than 3 years, we'll see that. Trade receivables also. Not only more than 6 months, less than 6 months, it is also broken down into granular details, both under non-current assets and current assets. And also for capital work in progress, aging is required. Intangible assets under development. So aging is required. We'll see that. 11 ratios with numerators and denominators. And if the ratios are different from the last year by more than 25%, it requires an explanation. So it's sort of now balance sheet becomes a project report. I mean, like the bankers don't have to do too much of a CMA analysis. We only do, the auditors only, I mean, the company only has to do the analysis and the auditors have to say if it is not done properly, we need to keep a track of that. So mandatory rounding off may be slightly painful actually for smaller companies when it is actually rupees in lakhs only. I mean, 1,25,000 rupees and it is rounded off, it may not look at all. I mean, so many figures will not be visible in the financial statements when it is rounded off. So this should have been an option, but then mandatory rounding off like in Ind AS. Details of Benami property held, conduit lending. Although the word has not been used, if I as a company have given it to X, which could be a company or a non-company, to in turn give it to Y, then I will have to report, in my financial statements that I have given it to X to give it to Y. And this is if from the giver's perspective. From the receiver's perspective, if for the X company, which receives it from a company and gives it to another company, this again has to be received that I have received from this company to give it to this particular company. So that is told in Schedule 3. Also in the audit report, a comment on that is required. Relationship with stuck off companies. Every personal account that you have in the financial statement, if there are any companies which have actually been struck off, that needs to be brought out in the financial statement. So very difficult. Practically, you see every company's name, we'll have to feed in and see whether it is alive or struck off. Then details of title deeds of land and building not held in the name of the company. That is, I think, anyway, we were commenting as auditors. Now the primary responsibility is on the financial statement preparers. Loans and advances in the loans or advances in the nature of loans granted to promoters, directors, KMPs and related parties required to be commented. Anyway, it was their part of AS 18. CSR details, shareholders pattern of promoters. I mean, what are the promoters? All these days we were giving comment on only more than 5% shares, but who are the promoters shareholding pattern and the movement in their shareholding needs to be commented. Whether details provided in quarterly information systems are in agreement with the books, if not reconciled with the reasons. So this is on the, first of all, on the company now. Good for the bankers. Good for the bankers, I know. People used to inflate their stocks and give it in the quarterly financial statements for getting their drawing power. Now in the financial statement itself, the company has to say that I have inflated. So that's the, you know, and if they don't say, I have to say as an auditor. So that is the, so basically, we have warned all our clients that please ensure in future that you have to go and tell this in future. It doesn't require a stock auditor now. All these days, it was the job of a stock auditor to comment on all these deviation. Now the statutory auditor of the company itself, first of all, failing which the auditor will have to qualify. So one job gone. The stock auditor's job gone. Accountant, auditor, statutory, stock auditor also.
So less DC cases on stock audit. Okay, but lighter things apart. One point on the related parties I'd like to mention, again, my experience. Many have this impression that related party reporting requirements here are taken care automatically if we do as per AS 18. But these two are not same. They're quite, there are differences in related parties as per this provision and as per AS 18. I would encourage keeping a separate working paper in file, which is the reconciliation of what is reported for this purpose versus what is reported for the purpose of AS 18. That working paper is a very important one. And normally when MCA inspection happens, this is one of their big areas of focus.
So whether details of charges or satisfaction pending with reasons. Now this we had an issue. What do you mean by charges or satisfaction pending with reasons? Please understand that charges have to be filed within CHG1 has to be filed within 30 days. Failing which between 30 days to 60 days, you can file it with an additional fee. Between 60 days to 120 days, you can file it with an additional fee and an ad valorem, 0.05% of the charge created values. Beyond 120 days, you cannot file. You cannot file. So that is what we are telling. Although I searched for this, what our institute says, my view is beyond 120 days, if it is not filed, that is when it says that it is pending. Pending means it has not been filed at all. If you don't file, to that extent, the charge holder is actually an unsecured loan. I mean, if the charge is not filed with the register of companies, to that extent, the public notice is not there. So therefore, the charge holder, although he has got all the title deeds, he stands as a unsecured creditor. So to safeguard him, we are telling on the face of the financial statement itself that charges have not been created. In fact, Companies Act 2013 requires pledge also to be
there. What exemption was in 1956 Act is not given.
Correct.
But still, nowhere in the country, according to my knowledge, this practice is being followed.
Now, I think it is now with this, the company has to say, failing which the auditor will have to say. No, I think he is representing Kotak Bank. So Kotak says they are insisting. Smart banks, I mean, today every bank has to be smart. Otherwise, like what he said, NPA cost will go up. No, they also have to ensure. Earlier days, yes, pledge was not required to be charge created. Disclose usage of borrowings from banks, financial institution not used for specific purpose. Again, diversion of funds being told by the company itself. So many things are there within the financial statement that if there is any indiscipline, the indiscipline will be told by the company itself. Failing which by the CARO auditor. The audit report changes. One is specified banknote deleted. Benami, we talked about is the giver company and the receiver company. The auditor has to comment looking into the management representation, very interestingly. But the fourth point is Benami transactions commented on the above through the audit procedures, through the auditor's independent procedures. Then compliance with section 123. The auditor will have to now talk about whenever there is a dividend declaration, whether section 123 has been complied with. Very interestingly, 123, we have the question of in case the dividends are given out of reserves. In case the dividends are given out of reserves, whether the rules have been, appropriate rules have been followed. And here I always ask a question, whether declaration of dividends out of reserves includes surplus also. Suppose a company has accumulated surplus and not out of the current profits. Not out of the current profits, they have declared out of the accumulated profits. Does it amount to declaration of dividends out of reserves? What is your view? No, the point is they talk about free reserves. Whether accumulated profit is forming part of free reserves. What do you say? Okay. So I'm just saying, let me give you an example. I have a 1 crore profit and I have an accumulated profit of 10 crores. I have a reserve of 20 crores. Now I want to declare 2 crores dividends. 1 crore is my current year profit. So I want to declare 2 crores dividend. So does it amount to declaration of profit, dividends out of reserves? That is the question. So let us be very clear.
It's already there in P&L.
It is there in the accumulated P&L.
It's not out of reserves.
Yeah. So let us be very clear. Reserves and surplus are two different things. Reserves means what we know as general reserve, whatever. But surplus is actually accumulated profits. So if you are declaring, in my example, 2 crores out of 1 crore from current year and out of 1 crore from the 10 crores that is already there, it doesn't amount to declaration of dividends out of reserves. That's point number 1. Point number 2, 123, when you are looking into, please take care of not only dividends, but also section 72 and 73, which talks about deposits. 73 and 74, talking about deposits. Non-compliance of deposits means you cannot declare dividends. So that is also a point to be noted when it comes to 123. Then auditor has to comment on this accounting software, whether it has the feature of capturing the audit trail. Fortunately, that will not be applicable for 21-22 because the audit trail in the software has to be built in from 1st April 22. So from next year onwards, this will come in. Board report also, there have been changes with respect to IBC and especially OTS. Whether there has been a change in the valuation when you took the loan and when you are actually going in for a OTS. Because most of the companies, Kotak will be knowing, Kotak will be very intelligent, they do their own valuations. But then some of the nationalized banks, I know that they, at the time of taking the loan, they give a valuation report of 10 crores. And the company goes in for NPA. And when it comes to settlement, the same promoters will say, I will settle it for 4 crores. Now 10 crores valuation property is there, how can you settle it for 4 crores? Means now they'll get a valuation report saying it is only 4 crores. So now the company board of directors only will have to say that at the time of taking the loan, it was 10 crores, now it is 4 crores. Now how it actually save the current bank? Probably it will show the integrity of the promoters for the future lenders. I would probably take it like that. Now this is getting into the details. I will not get into each one of the details, but let me talk about how the audit report would look like next year. Audit report will be lengthier because of course one thing is specified bank notes removed, but there will be new requirements now introduced on account of conduit lending from the giver's perspective, from the receiver's perspective. Of course, if you are only a giver, then the receiver will be not applicable. But afterwards, you will have to comment the first two, i.e. 1 and 2 is with respect to management representation, but the three materially misstated with management representation under clause 1 based on reasonable and appropriate independent audit evidence. The third report is based on the auditor's independent verification. Then compliance of 123 and the audit trail log, which we talked about. Benami transaction. Yeah. Now let me tell, sir, I want to know from Manor Gupta, sir, how will you deal with this rounding off? In a small company, now let me tell you, less than 100 crores, all these days, rounding off was an option to a division 1 although for division 2 and division 3 it was mandatory. Maybe division 2, division 3, normally we presume it to be big because their net worth is supposed to be more than 250 crores unless they are subsidiaries, associates, joint ventures. That's a different issue. But when it comes to a small company, so what are we supposed to do? So what we have done is in all the groupings, we'll keep the absolute numbers, but only in the schedules and the face of the balance sheet and profit and loss account, this has to be there. Not only that, it has to flow through all the notes also. Even in the notes, the same rounding off has to happen. I mean, anyway, you have to have the same unit of measurement. You cannot change the unit of measurement. Having said that, you will have to allow, we were seeing less than 100 crores, nearest hundreds, thousand, lakhs or millions. 100 crores or more, it is nearest lakhs, millions or crores. In Manohar Gupta sir's office, he has got about 300 companies. So for 300 companies, if he has to standardize, I have put it in brown. For all companies, you give it in lakhs. You see what I am saying? So lakhs and millions are actually common, because when you are actually preparing the finance, see, practically, theoretically, again, when we are actually doing it on behalf of the client, I don't mind giving an accountant's report if it is possible, but we have to give for the Companies Act audit report only. But the point is, how do we, in my office, when I'm doing 300 companies, standardize this? So we said maybe make it rupees in lakhs. But the problem there is some of the figures may not be visible at all. Maybe to that extent in smaller companies, we'll have to multiply it by 10 into 2 again, something like that. So rounding off is mandatory. Now, details. How I have put this, again, I brought down the balance sheet into 4 different purposes. If I may have to say, 4 different purposes. Details which could aid the bankers for financial analysis. Details which could help the financial analysis in general. Second one is details in companies dealing with banks and financial institutions. Details pertaining to Benami transactions and other disclosures. And this is my way of analyzing the reason as to why it has been put it into 4 different buckets. The first one is financial analysis, aging of trade payables, trade receivables. We have already seen 11 ratios and mandatory rounding off. So all these helps in probably aids in better financial analysis. From the banker's perspective, details of usage of borrowing from banks, financial institution, willful defaulters, quarterly information not, and charges. Benami transactions, Benami property, utilization of borrowed funds and share premium, conduit lending, details of title deeds of land and building, compliance with number of layers of companies. So we are supposed to say, have you breached 186 subsection 2. Then other disclosures like shareholders pattern of promoters, loans and advances, relationship with stock of companies, whether revaluation of PPE is done, if it is done, whether it is done through a registered valuer, and compliance with approved scheme of arrangements. Now here I have an issue. Some of the changes, if you see in the notification, they have made the changes from this, you will have to replace with this. And certain things they have brought it under additional regulatory information. They have brought 14 items under additional regulatory items. For example, capital work in progress aging is required under additional regulatory information. My question, maybe to MPV and to Manohar Gupta sir, is whether I can give it within the, let us say when I am preparing the PPE, my fixed asset, earlier fixed asset, now PPE, below that I used to give capital work in progress. Now I would give there only the aging analysis of the capital work in progress. Or should all these 14 additional regulatory information be given at the end? Like if you remember, before this thing, we had something called, what is that, sir? Part 4 of Schedule 6. So is it like a part 4 of Schedule 6, or whether it can be given for the sake of convenience? I want to complete it there. Your view.
Very clear. It's like part 4. And this again is Institute's recommendation. In fact, we wanted most of whatever has come to go under regulatory information. And we actually wanted to keep it outside auditor's responsibility as well, because these are all management related communication which is done. And the idea here was, when you look at financial statements, it should give information relating to the numbers in the balance sheet, numbers in the P&L, cash flow. Whereas most of these questions like Binami, etc., are all relating to governance matters, etc. So we pushed them hard. So they have borrowed that part 4 concept and taken there. And Institute is continuing efforts to push more and more into that category, more and more into that category. So it has to be given only separately. Now the heading itself is called additional regulatory information. So in notes to accounts, part A will be your significant accounting policies. Part B will be explanation to the figures. Part C will be the additional regulatory information. No.
Let me be clear, sir. This particular slide brings out what are those 14 slides. For example, aging of trade payables, trade receivables, both under non-current and current assets is not under regulatory. It is not under regulatory. Capital work in progress, that is the 4th item. That's why Vijay put it. And intangible assets under development is under regulatory. 11 ratios under regulatory. Then if you come under willful defaulters, then quarterly information system is whether it is an agreement. Anyway, we have to comment on the use this to comment there. But this is the point is you don't have to sign that. I mean, that's a very interesting thing. I mean, auditor has to sign. So the responsibility is not in that extent removed, but then it is.
Yeah. So I clarified saying that our idea was to remove it. The least we did is to move that outside the financial statements part of it. So it goes as additional regulatory information. And over time, we have to see whether we can keep the auditors out of that. Because now it's still part of the financial statements only. Unlike that earlier part 4, where auditors were not involved actually.
So anyway, the point is, these are the 14 items which can be, I mean, which has to be in the additional regulatory information. Let's get into the granules, I mean, granular details. Aging of trade payables, less than 1 year, 1 to 2 years, 2 to 3 years, more than 3 years. But very interestingly, the guidance note goes on to say, insert additional columns before the aging columns to match total in the financial statements. Because you can still have something which is not due for payment at all. Or it could be on account of unbilled revenue. So that you can keep it separate, for which aging is not required. So that is what has been told additionally. And of course, this is aging of trade receivables, also the same thing. And here they, again, just like what it was already, it is from the due date of the payment, not from the transaction date. So that is why if something is not due at all, you can still have a separate column, or for unbilled receivables, what we call unearned income. Capital work in progress, aging analysis and completion schedule required. The guidance note goes on to give a lot of guidance as to how it should be disclosed, and it could keep changing between the years. It could keep changing in the 4th year and in the 5th year, it could keep changing. So a lot of guidance have been given. And it also talks about amount in capital work in how they have given a format in which it can be given. And it need not be asset wise. It need not be asset wise. It must be rather project wise. I think that's the guidance which has been given. Similarly, for intangible assets under development. Now we come to some of the interesting points on ratio analysis. Shetty, we were talking about this ratio analysis. I had given one ratio at the time of last time. Now our guidance note gives some ratios, especially the return on investment. The ratio Mr. Vijay Kumar will explain, because I don't know how this ratio is to be calculated now. No, they have that particular ratio. This is the ratio they have given for return on investment. MVT1 minus MVT0 minus sum of C of T divided by M. It's like a trigonometry, like a lot of MPVs. Yeah, I don't know. MV is there. MPV is not there. That's all. This must be MPV's creation only. I don't know. Now, I asked him why this particular so complicated ratio is given, because in the guide, in our institute's study material itself, I used to teach for financial analysis here. We used to say return on capital employed. I don't know. Students are there here now. You can say return on capital employed is equal to return on investment, right? I don't know. Because capital employed is equal to investments. So therefore, I always, in my ratio, I already put saying that return on capital employed and return on investment, why they're asking two ratios separately, because anyway, the result has to be the same. But now our institute has given for return on capital employed, they have given the ratio which I wanted. But when it comes to return on investment, they have given a very complicated ratio. They've asked us to calculate the market value of last year, market value of the current year, cash inflow, cash outflow. Sir, our entire audit fees will be for this one ratio calculation. Finish. And if you don't follow the guidance note, you are sort of, you have to give a reason. Maybe my justification will be the study material only. I don't know. Sir, your views. Yeah, no problem. Now, before that one, there is one small mistake. What has happened is debt service coverage ratio. Current ratio, I don't have a problem. Debt equity ratio, I don't have a problem. Here, debt means long-term debt divided by equity means net worth. Debt service coverage ratio, in the bankers, we have a gross DSCR and a net DSCR. Very interestingly, this is one gross DSCR and net DSCR. By thinking, we should always think that gross means bigger and net means smaller. Right, sir? But when you actually go in for DSCR calculation, gross will be smaller and net will be bigger. I mean, those of you who know this particular ratio, you will know, because gross includes interest in the numerator, and in the denominator also it includes interest. Whereas net means, I will say after paying the interest, how much DSCR I have. So that is how it is calculated. Whereas I had calculated using the gross DSCR, that means after paying net DSCR, that means after paying the interest, whatever institute recommends is calculate it on the gross basis. In the guidance note, what is told is the gross basis. But I wanted the net because that figure looks bigger. Always when you are an accountant, also you think like a finance man. So it looks as a businessman. So it looks better. But one mistake that has happened is even in the final guidance note, they have used PBT for DSCR, PBT plus depreciation. Interestingly, I checked up this in the draft. In the draft, it was PAT. But in the final, it is PBT. I still feel that this is a mistake, because as a banker, what comes for the debt service coverage is after paying the taxes in that sense. So return on equity, when they talked about so many other ratios, Manar Gupta sir, equity, turnover, like in the textbook, they have used the average. And average, they have told us the opening plus closing divided by 2. But I have used the year-end figures. Normally in the bank, when we give the CMA and things like that, it will be the year-end figures which we take, whereas here they have taken the average. But the interesting point is when it comes to trade receivables ratio. Trade receivables ratio, normally we talk about turnover divided by trade receivable. They've gone to the extent of textbook, net credit sales. Now, within the sales, how much is credit sales? When we have export sales and local sales and services. Now we'll have to have a column within sales, how much is credit sales and how much is cash sales. Or we'll have to assume that everything is on credit. Even if it is on cash, means maybe 1 second the credit. I don't know. Maybe that's the point I'm trying to say. Problems of practitioners. Problems of practitioners, especially those practitioners who who give an accountant's report, if I may use that. So net capital turnover ratio, I don't have a problem. Net profit ratio, I and the institute are matching. Only return on capital employed and return on investment. So I would still go with the, sir, Manar Gupta sir, what ratio you will give? For return on investment, very difficult, sir. Sir, we are not preparing only this ratio statement for the financial statement. Very difficult. When I spoke to this up to MPV, he just said, did you comment when the draft was given? I said, when the draft was given, I was busy finalizing my financial statements. Check the guidance note. No, I can put the guidance note on. Yeah. This is exactly from the guidance note. Yeah. Now, okay, let's move forward, but this is going to be very, very difficult. I don't know whether that is the reason why you have not contested. Okay. On a lighter note, that was. Having said that, we will have to now marry these two. I mean, my version versus the, I still feel that my version is sort of better off. Yeah, better off. Especially carrying the average shareholders, that is opening plus closing divided by 2, average inventory. If you ask the bankers also, they don't do. Or if you do, you have to do the strictly average of all the 12 months. Yeah. Please, Micah.
September 7th, 2020. I have mentioned what is the financial parameters to look at it just because of the COVID. And just the same formula. So more or less similar to that, but again, they haven't really given the formula, but it just says DSCR to look at it is, both ways. Average DSCR has to be calculated as well as the other ratios. Maybe you can just
Sure,
look at
please
it.
send it to me. Yeah. And the institute has given a table in which the ratios have to be told. Because what the ratio, what the requirement is, following 11 ratios to be disclosed, explaining the numerators and denominators used for computation. You cannot say current ratio is 1.7. You have to say how this 1.7 has been worked out. 170 of current asset and 100 rupees of current liability. So we have to give the numerator and the denominator. So by the numerator, do you mean actually what is taken, current asset, and denominator current liability, or 170 and 100?
Exactly.
No, that will still be the same. I think it still be the same.
You have to synchronize. See, ratio example is EPS. If you look at EPS, numerator and denominator have to be reconciled. So people should be able to connect the numerator used with what is there in financial statements and denominator. So here also the same thing needs to be done.
170
Yes.
and 100.
You
And that 170 should be visible in the
exactly. Or what are those 3-4 things which are totaling up to that 170?
Lot of non-compliances for FRRB. Okay. Going concern. I think this is with the connect. Once you calculated those ratios on the basis of the financial ratios, now all these days on the basis of financial ratios, where are the financial ratios? The auditor only had to calculate. Now at least if it is a class company, the company will prepare and give it to you, and based on those ratios, aging and expected dates of realization. The aging analysis is also prepared by the company, and payment of financial liabilities, other information accompanying the financial statements, the auditor's knowledge of the board of directors and management plans, whether the auditor is of the opinion that no material uncertainty exists, as on the date of audit report, that company is capable of meeting its liabilities existing at the date of balance sheet, as and when they fall due within a period of 1 year from the balance sheet date. This is what MPV I mentioned, that auditors as astrologers. Now, yeah.
You should allow me to have a difference of opinion. Even see, as far as the financial statements are concerned, fundamental is we are preparing on the basis of going concern. And the users of financial statement need to get the confidence that going concern situation exists. And when the auditor is giving opinion, saying that he is convinced with going concern, he has to have a basis for coming to that opinion. So today, if you look at, I have been in practice myself also, as I told you, we assume going concern is there. We don't create a working paper for that. We assume going concern is there, and accordingly financial statements are prepared and things like that. So what this specifically says is, please do apply your mind. Look at some of the solvency ratios, particularly short-term solvency ratios. Also the loan repayment obligations which are available depending on the schedule of repayment, and any other aspects, and convince yourself about the fact that going concern exists. most of us sign in July, August, September. And when we sign in July, August, September, if we can't confirm it will exist for another 8 months, what is the value we are adding to the user of financial statement? The minimum the user expects from us is at least tell me this organization will survive. At least tell me that. Otherwise, what else can I expect from you? You at least help me understand that. I'll give you a small example in the context of prospectus. If you look at prospectus, there are normally 2 declarations taken from all the signatories. One is they certify that all the facts are there. Second is the fact that they have not withdrawn their certificate. So the idea of taking that certificate is there's an application of mind. Orally, I can tell I have taken care, everything is there. But when you ask somebody to sign, he thinks. When you ask him to sign the second time, he thinks a little more. So the idea of this is, boss, the whole world is believing you're signing off on going concern. So just ensure that, give me an assurance that you have looked at the minimum these ratios. And I'm telling you, you consider any other aspects also, whatever you feel is appropriate. What you, even for audit opinion, my entire work starts with going concern. So you tell me, give me that assurance and give it a little more explicitly. So I don't think, my view, friends, please don't mistake me. Please don't mistake me. When we prepare financial statements, we are not preparing for management. We are not preparing for auditors. We are not preparing it for audit fees. The financial statements are meant for users, investors, lenders, and then there are secondary users who are there. So we are preparing it for them. So for them, if your product is not going to meet their requirement because you are finding it difficult, I'm finding it difficult, I find it risky, and if it is not going to meet their requirement, then the financial statement itself will lose relevance and people will start looking at other means of information. So if as a profession we want to stay relevant, we have to take that responsibility. If I cannot even confirm this guy will survive for 8 months, then I don't think we should. And my view, that much professional judgment, chartered accountant should be able to do that. If I myself cannot do that, investors, lenders to expect them to do is a little too much. So, pardon? That's a different discussion. So, sir, my request is we shouldn't link up everything. And on the independence, again, we can debate. Independence, people can tell, let third party appoint auditors, independence will come. We have seen that in countless state public sector enterprise. We have seen how independence work, how auditors get. It's a different discussion altogether, sir. My view, independence is a state of mind. Like, for example, the way I have been trained, I'll speak only like this. I cannot speak because I'll please you. Similarly, you are such a person that you will speak your mind. You will not say something because you have to please 20 of us. So as a chartered accountant, and if you look at our institute's 3 objectives also, independence is fundamental to my function. So that independence does not come out of appointment. Independence is a state of mind. It's a state of mind. Just because I am appointed by my client, I will not compromise independence. Then what professionals? It's a different discussion, sir. We can have it later, sir.
Very well put from the user's perspective, sir.
No. Even for standards also, I keep coming across this criticism. People say standards are heavy, etc. and all. I don't know how many of you actually read the conceptual framework. It's a mother document. The mother document of whether accounting or audit standards says these are drafted only for users of financial statement. It's like cooking food. For cooking food, if I have a SOP of 100 things to do, hygienic cooking. It may be difficult for me, but for user, it has to be palatable, hygienic food. So it's only users' interest that matters, not the preparers' 101 difficulties they have to go to. That is not the concern at all. That's not the concern at all. I'm sharing it very, very transparently, and it is there in black and white in the framework of accounting standards, in the framework of audit standards, which is the mother document based on which the standards are all drafted. Good, you highlighted the point for me.
Yeah. No, I mean, I would only say that auditors as astrologers, I will substitute the word astrologers with professional judgment. And judgments can go wrong. I think that's the premises with which we move forward. Quickly, yeah. No, 1 second, please take the mic. There are other people.
Ratios and other aspects, not based on ratios. Yeah.
You want to give a judgment based on the ratios and other aspects, and if any one of the ratio does not meet the standard ratio, so can we give a judgment in the negative aspect for that?
Sure. I mean, if it is negative, you
Yeah.
will say that it is not as per going concern. That's what you are saying.
For this point, I'm asking.
Yes, definitely. And then accordingly, the other qualifications or the financial statement itself has to be prepared accordingly, and things like that will flow in.
Small example I want to give you. Let us say, for example, current ratio is 0.7.
Yeah.
Those cases, it does not mean going concern is not there, because there can be another aspect where the principal shareholders have committed to bring in capital, or the current ratio on that date is so much because of ABC reasons, which got rectified subsequently. So that other aspects is important. So here they're basically prompting you to tell that please apply yourself. Just ask one conscious question. Every year we sign on going concern. Do we have a working paper in file where we have signed off that we have tested going concern, we are comfortable? We have tested indicators. We don't do that, no? So now this taking you in that direction. That's like if you take IBC, no? If you look at IBC cases, we have signed going concern in August. October they have filed for IBC. How does somebody explain that? Somebody has to take ownership for that, no? So that's the direction. I'm not saying this is perfect. The question is, from probably -10, we are coming to -5. We'll go back to -7, then come to -3, then go up. So it's a journey. I'm not saying everything here is correct. What MC has done is correct. You don't know how much we broke our heads to convince them to come here. And I myself know how many problems are there in this document. And even in the guidance note, within private judgment, many places we have not added guidance because adding guidance will tie yourself. That little freedom will go away. So that freedom should remain. My view, guidance is required only when there is a lot of ambiguity and so very critical. Otherwise, rest of it, judgment has to be exercised. Yeah.
Will change.
Yes.
Reporting is a hard thing there because none of these ratios they'll be able to meet.
It's other aspects. See,
Okay.
in case of a startup, the fact that you have a commitment for Series A capital or there's a plan for raising capital, you'll write all that there. So nobody is stopping you from doing it. All that you can do.
No, but there is a specific timeline saying that within next 12 months of the balance sheet date. So while investments takes time, most of the time it doesn't happen within the 12 months.
So you would have a cash flow statement of the company or a budgeted cash flow, where the company's cash flow, you'll know that the cash shortfall is 3 crores, cash shortfall is 7 crores, and how they are bridging it. You take that as a working paper and keep it, no? You keep that. So it doesn't stop you from doing it. So there can be a deep loss company and still going concern can be met. And we have been doing it all along. See, this is nothing new. It's only asking you to
Give out the obvious.
explain the logic.
Yeah, but as you rightly said, practical issues will be there. Sometimes if the auditor does not comment on the going concern, maybe the concern would have gone on. I don't know. Sometimes we have a practical issue there. If I comment, the concern will actually stop. If I don't comment, I will stop. I mean, this is actually this is a big problem practically. while we are talking from the user's perspective, I am for the auditors community. Although obvious is one thing, but when you express it, you are to that much more caught. But for me, they would have come.
Yes,
And
exactly.
it would have flourished.
Flourished,
It
yes.
would have become a Zomato and, whatever in that sense.
I don't know whether it's balance sheet was.
Absolutely, absolutely. Very yeah. Yeah. Yeah, okay, let's move forward. We have another 15 minutes, Chairman. Yeah. So disclose whether QIS we have discussed, of course, we'll have to look into the various books of accounts on a quarterly basis. How do we cut off the books of accounts is a point which has to be seen. And borrowings, the guidance note went on to comment that during any point of time, if a company ensures, yeah. It's okay.
Yeah, can do.
Okay. Okay. So,
planned the returns in the
okay. Now, if a company's borrowing is more than 5 crores, I think that's what they're trying to say, more than 5 crores at any point of time. It is not only at the year end or the quarter end. The guidance note went on to say at any point of time. And then reporting under this clause is confined to the quarterly returns, although it could be monthly returns also. That means there could be discrepancies in April, May, but make good in June. I mean, that's although that is the thing that is telling. Then the illustrative format for disclosure is as follows. The guidance note has given us a format for disclosing within the financial statements. And linked up to this question is a CARO question, whether during any point of time of the year, the company has been sanctioned working capital limits in excess of 5 crores. That means, first of all, it is applicable only to companies, and those companies where, of course, CARO itself is applicable, Schedule 3 itself is applicable only to companies, but this particular clause will be applicable only if the borrowings are more than 5 crores, and that to working capital borrowings. Suppose a company has a term loan of 25 crores and a working capital borrowing of 1 crore. The question of FFR or QIS is not asked by the banker itself. From the banks of financial on the basis of security of current assets, whether the quarterly filed by the company with such banks of financial are in agreement with the books of accounts of the company, if not, give details. I think ad hoc also.
There will not be written sanctions.
Is there a need for you to submit the QIS? I think that becomes the question. See, normally every month we submit the stock statement. I know State Bank of India, we submit FFRs, financial follow-up reports, every 3 months. Even in Kotak, 3 months. His question is, let us say 3 crores was his regular limit and 5 crores came in as a ad hoc limit for one time. Thereby it breached 5 crores. Does the question of this arise? From the banker's perspective, do you ask for a QIS in that context? Yes or no? Ad hoc is, let us say, for working capital purpose.
Working capital. And sometimes, we also issue sanction letter. Not that we will not, where we have to communicate to the client, right? Just not the client comes and asks me, I just simply give an ad hoc for a day. Maybe a TOD, yes, what he mentioned is TOD, maybe against some receivable or against some check not under clearance, so we may give it. But if it is a proper, ad hoc for a minimal, say, 15 days, 30 days, we enter into documentation.
So in short, even in ad hoc, it applies. Your views? You have any other views on that? Okay. Okay. Next. Yeah. Correct. See, it may be non-fund from the point of view of the receiver. From the bank's point of view, the risk is the same. Okay. Next, where the company has not used the borrowings from banks, financial institutions for the specific purpose for which it was taken at the balance sheet date, disclose the details of where they have been used. ICA guidance note, not necessarily to establish a one-to-one relationship with the amount of borrowings and its utilization. Quite often found that amount of borrowings obtained is deposited in the common account of the company, and thereafter from there it is gone. So as long as the end use is established, you don't have to comment on the intermittent use. Auditor on this point must also comment on the new CARO. So whether term loans were applied for the purpose for which the loans were obtained. If not, the amount of loan so diverted and the purpose for which it is used may be reported. So difficult to access the affairs of other party to whom company has diverted funds. Was previously there in 2003, CARO. Thorough verification of cash flow statement throughout the year may be required. Willful defaulters. If the company is declared willful by any of the banks or financial institution or other lender, following details should be given. Fairly simple, isn't it? I mean, but then how do you know? How do you know? In fact, RBI comes out with the list of willful defaulters. Now, on the date of signing or on the date of balance sheet, date of declaration as willful defaulters, details of defaults, auditor must also comment on this in the new CARO. So what is the question in the new CARO? Whether funds raised, whether the company is a declared willful defaulter by any of the bank or financial institution or other lenders. Companies declared willful defaulter. Who declares it as willful defaulter? Reserve Bank of India, right? The Reserve Bank of India. Banks declare and report it to Reserve Bank of India. And Reserve Bank of India comes out with the list of willful defaulters. Now, Kavita's question is, how do you work out with other lenders? Is there a mechanism where other lenders also declare them as willful defaulters? I mean, maybe yes, but no. By any the question is banks or financial institutions or other lenders. No, I think, that's why I put the definition. You're right. Willful defaulter here means a person or an issuer who or which is categorized as willful defaulter by any bank or financial institution or consortium thereof in accordance with the guidelines on willful defaulters issued by RBI. But the question here is other lenders.
From the consortium.
Other lenders can come from the consortium.
In this definition, there is no mention of other lenders.
No. Other lenders, actually, now there are a lot of syndicated loans where they raise it from others. So those others will also come there. Yeah. No.
My point is, suppose it is a NBFC or it is not a bank, but somebody else who has some other company which has given a loan and we have defaulted there. Will that come here is the question. No. The definition of willful defaulters here is.
Don't you mean that NBFCs are financial institutions?
Maybe.
Yeah.
Maybe.
Then, other lenders is apart from financial institutions or the NBFC.
I'm talking, that's why I changed it to another company.
Correct, right?
Changed it to another company.
Yeah.
Then the investor could be any other than the bank also can invest.
So finally, it should go through Reserve Bank of India and come. That's what I'm saying. Or NCLT.
I don't think this clause applies only if RBI is declared. As long as that RBI definition of willful defaulter is fulfilled, then any other lender also will identify you as a willful defaulter. For example, RBI has given this in the context of banks. They have said willful defaulter, these situations. If another lender is given and coming in the same situation is discovered, that's the meaning there. It could be.
Related for that particular case and then
That NBFCs.
Yeah. The next question is on. Sorry, I think. Yeah, details of charges or satisfaction pending beyond statutory period with reasons. We have discussed that. So more than 120 days. In fact, the institute has not given any guidance on that. They said just if it is beyond, you'll have to mention that. So they did not use the word 120 days and things like that. So Benami transactions we have discussed. Yeah, additional reporting in balance sheet. Utilization of borrowed funds and share premium. If the company has advanced, loaned or invested any funds to any intermediaries with the understanding that such amount shall be lent, invested, used to provide guarantee or security to other persons in a manner that the company becomes the ultimate beneficiary, disclose the following. So finally, I have lent it to X and asked him to give it to Y. So in that context, and the second company is if the company has received any funds. So the first bit will apply if I am giving it to a company to in turn give it to somebody. The second bit or the first bit, please understand, if I have given it to a company or a non-company also. The second bit comes when I am a company, I am receiving it from a company or a non-company, including a foreign person, to be in turn giving it to another person. So that is how it has been built up. If the company has received any funds from any funding party with the understanding that the amount advanced to it is for the benefit of the ultimate beneficiary, disclose the following: date and amount of the fund received, to whom you have further advanced, and whether FEMA provisions have been complied with. Absolutely. Now that is where they are saying, first of all, it is based on management representation. The guidance has been given. I mean, let me read you, take you through the guidance note. I mean, in fact, I went on this very clearly. How will I know? First of all, they said take management representation. Then look into the various proceedings of the company, including the minutes, documentation, and your independent observation. On all these matters, it may not be there. On all these matters, it may not be there. So this requires companies to cover transactions that do not take place directly between company and ultimate beneficiary, but are camouflaged by including a pass-through entity. I'm just reading from to hide. It might be noted that the reporting obligation includes inbound as well as outbound funding transactions. It is implied that advances given or received in the ordinary course of business shall not be covered as part of this disclosure. The company may restrict to disclose only the pass-through transactions during the current year. Only what has happened during the current year you comment. What is already there, you don't have to comment. Then the term with the understanding shall be construed. I think that is how it is put in the guidance note. Basis appropriate evidence. So based on appropriate evidence through board meetings, board resolutions, shareholders resolutions, investor agreements, share purchase agreements, term sheets, or any other relevant appropriate documents evidencing such an understanding, either specifically in writing or otherwise. Specifically in writing or otherwise. Otherwise, that is not specifically, but through the objective or understanding of the overall transaction bar flow of funds. So that means basically through documentation or through a sniff of the transaction. You want to add something?
I just want to add. See, I think all of us are fighting this menace of siphoning of funds. All of us are aware. Now, what this provision seeks to do is, anytime I give a loan or advance to another company, the basic governance principle is, as a person lending or advancing, I should know the end use of funds. That's first question I should ask. So suppose A is giving it to B. So A is giving on the basis of ask of B, end usage, and I tell that, and I take a end usage certification. I'm supposed to do it. I'm talking about material transactions. If I'm in manufacturing business, first of all, there's no need to give a loan. If I'm giving a loan, there is something. So I should apply a little better yardstick of governance. So I need to do that. And if that entity has asked you on day one itself that I am borrowing it to give it to my subsidiary, I need to keep a track of the same. And generally, if you look at these organizations, my little experience of audit and having been in FRRB, QRB, all that stuff, somewhere evidence will be dropped where there will be a mail floating between two junior people that this money has not come back because that company is yet to pay them. There will be some mail, somebody will leave that evidence. So you can plan it super strong, but there will be somebody at the bottom who will write that mail or innocently communicate saying that this money was supposed to come, it's not come because this money went for that purpose and is yet to come. So we are required to spend that extra diligence. So now, for example, in our audit tools and all, so we need to apply AI, etc. We will get there. But at the minimum, we should have documentation to tell why are they borrowing, what is the end use certification, and let's suppose the end use they tell is for acquisition of machinery. Minimum I should see is in that balance sheet, has the fixed assets figure gone up by that amount? I gave 10 crores, fixed assets went up by 2 crores. That should be a red flag. Now, are we verifying those? No. Are we required to verify? Answer is yes. So that's how. Please don't get me wrong, but I'm repeatedly saying that if we want our product to be relevant, you should meet the consumer's expectation. If you're not meeting consumer expectation, the product will become irrelevant. So question is, do we want to stay relevant? And is this an unfair ask? Let us ask ourselves also. And let's also look at the following. We are a regulatory body, not a welfare body. So as a regulatory body, I should think from regulating. I want things to happen like this. I don't want things to say, no, it is happening like this. So let me find a way to help how these things happen. Then I'm not functioning as a regulator. So question is, we should decide whether we want to be a regulator or a welfare organization. So that decision we have to take. As a regulator, this is the minimum ask. I know it's challenging. I'm not saying it's impossible. And let me tell you, SEBI is now proposing for listed companies where they're asking, they're asking any money which has been given, has it been given with the intent of ultimate benefit coming to the company who has given or any of its promoters? How do you establish those things? Pretty difficult. But the point is, as a regulator, every day they are seeing those cases. Every day they are seeing siphoning of money. So that's their problem. Please, please, please. 100%. Everything material, sir. Everything material. If it is immaterial, don't even spend time.
We cannot find out all.
Doesn't matter, sir. Doesn't matter, sir. Doesn't matter. Blanket, my neck on the block. If it is not material, don't waste your time. But the problem is the organization will go into difficulty only when it is material. If it is immaterial, why will the company go into a problem for giving loans to someone for 0.5% of the balance sheet total or one? They will not go bad. Yeah, yeah.
While it is lending.
If it is material, we should do, sir. If it is material, we should do. If I'm giving a 10 crore loan, 50 crore intercompany loan, I have to apply my mindset. Bank, okay, how many questions they're asking us, sir? When
See, in most of the IBC cases, what has happened, like they have lent to a subsidiary and his end use is not traceable. He's misused the fund and finally they've gone into bankruptcy.
Yeah.
Thank you.
This fellow who gave initially without enough documentation on why he gave, how it gave, where it went, should we not hang him? No, I'm asking.
Yes.
Obviously, no. So why are we sympathetic to them? I really, there's no need to be sympathetic to them. They are the guys who bring disrepute to us. Why should we be sympathetic to them? Just how do we explain August balance sheet signed going concern, October IBC? How do you explain that? So I think it's.
Thank you, sir.
Do you think it will be easier in the second case where I receive and give? I mean, I'm just loud thinking. Where I have received and I'm giving, maybe the trail is there. But from the first perspective, the company has given and he is in turn giving. So I don't have any records. Maybe to that extent, yeah, I have to now look at the loans given without a reason. Maybe I think that's why they said you look into your asset side, look into the normal advances. Advances, you don't have to worry. You are getting back the
loans in ordinary course.
Loans in the ordinary course, you don't have to worry. The loans which are given without any reason, that is the one which you need to question. There should be some basis, and you have given it to a.
And to be very honest, we know, sir. As sir said at the beginning, we all know. We all know where the money has gone, and we all know where it doesn't come from. We all know. What are we trying to say?
Yeah.
That's the basis for audit fee also. No, say we are saying we ground reality for certain things. This is also ground reality. We know. We know.
Sometimes it is the reason for not getting the audit fee also.
Yeah.
Because it is diverted. Details of title deeds.
NCA is thinking about your audit fee now.
Yeah. Details of title deeds of immovable properties not held in the company's name. Anyway, we have been used to through the CARO, and now it is coming. But the point, of course, there in CARO also it was told here, if the immovable property is held as inventories, then to that extent you don't have to really worry about it. Although, of course, don't have to comment. It has to be a matter of worry, but not a matter of. Now, it also talks about whether it is in the relative's name or in the promoter's name. You'll have to go to the directors or employees of the promoters or directors. Now, who is the promoter? I mean, promoter is not the original person. The promoter is also the person who steps into the shoes of the original person. So in short, SEBI wanted to give this revised definition of promoter means person in charge. Now that would have been a better terminology. Anyway, this question is already there in CARO, which we have been used to in answering it. Now, compliance with the number of layers of the companies. A new question, I mean, new requirement in Schedule 3, where the company has not complied with the number of layers. So how many layers can be there in a company? Not more than 2 layers of subsidiaries, subject to certain exceptions. So normally we can have only 2 layers. So I can invest in A can invest in B has to be a operating entity. So I cannot have more than 2 layers of B investing in C investing in D. So you cannot have multiple layers like that. So it has to be an operating entity beyond the 2 layers of subsidiary. But exceptions are carved out in 186(1) itself to say companies incorporated outside India, or to meet the requirements under any law for which you need to have a special purpose vehicle. So these are the, additionally through the rules we have 1 layer which consists 1 or more wholly owned subsidiary shall not be taken into account if it is a wholly owned subsidiary. And banking companies, NBFCs, insurance companies and government companies, this has been given a go by. Yes.
May have 7, 8 above layers. 6, 7, 8.
Outside India, it is okay.
But the
company acquiring any other company incorporated in a country outside India. So you are acquiring a company acquiring any other company incorporated in a country outside India. If such other company has investment subsidiaries beyond 2 layers as per the laws of such country.
That in that country it is allowed.
So disclosures of loans or advances in the nature of loans granted to promoters, directors, KMPs and related parties. This is what MPV was talking about. Even in FRRB we used to see that the difference between CARO loans and the AS18 loans. We had split there. The reasons for a difference, the same reason will continue here. Could appear both under current and long term, repayable on demand without specifying terms of payment. So earlier we used to say that, we don't know, there is no terms of repayment. So therefore it is repaid on time. So if it is not without specifying any terms of repayment, that has to be specifically captured and told. Subsidiaries, only subsidiaries. Now, without specifying any, the auditor must also comment on this new CARO from financial year 21-22. What is that question? Whether the company has granted any loans or advances in the nature of loans, either repayable on demand or without specifying any terms of payments. The same question is there. Promoters shareholding. Now, what is this promoter shareholding? Shares held by promoters as at the end of the year and percentage change during the year. So promoter's name, number of shares, percentage, and promoter here means not only the original person, but also the person who has stepped into his shoes. Yeah. Basis of revaluation of property, plant and equipment in case you have revalued. Auditor must also comment on this in the new CARO. Under the heading property, plant and equipment, there has been a very small change. In case you have revalued more than 10%, you will have to give the reasons. But anyway, under accounting standard 10, we have to comment on this whenever there is a revaluation. So more than 10% or less than 10% does not really matter. Now there are certain other disclosure requirements. Current maturity of long-term borrowings. I mean, if I have borrowed 5 crores, the 1 crore which I have to repay in the next 1 year. Earlier, I used to show it under other current liability. Now it is shown under required to be shown as short-term borrowing. It's a small change. Security deposits shown under other non-current assets instead of long-term loans and advances. A change in the headings there. Under non-current assets, after the word property, plant and equipment, the words and intangible assets shall be added. So how does it look like? This is how it looks like the balance sheet now. Non-current assets, property, plant and equipment and intangible assets. Under that we will have number 1. Earlier it used to be tangible asset. Now it will be property, plant and equipment. The heading W is a small change. They've also included intangible assets. Now this is a very challenging one. Relationship with stuck-off companies. Name of the stuck-off company, nature of transaction with stuck-off companies, investment in securities, no problem. I will have few investments. Now, when it comes to receivables and payables, so I will have to look into receivables and payables. One is age them. The other one is to see by name, if they are companies, I have to see whether they are active companies or stuck-off companies. So just like we have for TDS purpose, whether they have filed the income tax return for the last year, otherwise it is double TDS rate. So we'll have to now see whether all those receivables and payable parties are alive companies or dead companies. So Honor's responsibility to check whether the, what was the need for this? Did you, any need for this? Huh? No, see, no, point is if it is payable, I don't mind. If it is receivable, I have an issue. But the point is, I don't know why there was so much of a work given. Is there any?
No, what the relation with stuck-off companies?
Stuck-off companies.
No, the idea is they are trying to create a database of syncing with the figures which stuck-off companies are showing versus what we are all individually showing. They're using this as an opportunity to do the database sync.
Ease of doing business.
No, they tried that, it didn't work.
Very. No, it's a very onerous. That means, I mean, I have to check up every day. I mean, I would anyway do it for the receivable. For the payable, I may not do. I will be happy if it is stuck off. I mean, that's a different question. But the point is,
there's a problem in payable also. Suppose the company is stuck off and you're not paying for more than 1 year, then you run the risk of being treated as deposit. So in your own interest, it's good to do this.
No, sir, creditors, we don't.
No, creditors also, if you are not paying off. No, creditors, no, aging is required.
Creditors aging is required, but it is not. It doesn't become deposit.
No. It can underlying transaction can be questioned as a deposit. That's the problem.
Liabilities. So let us take the company, they got liability is there. They just withdraw the liability unilaterally. They make application for striking off. But now this company which has given, they have to keep a track whether that is because they have written off the credit balance and taken that could be the properly reason behind it.
Some of these are harsh. I'm not
I know
that.
Yeah. Compliance with approved scheme of arrangements, wherever it is there, we look into that. Specified bank notes have been removed. Now we come to the changes or additional reporting requirements in the statement of P&L. Small heading change. What we had as a total revenue has been replaced as total income. Understandable. Okay? Because revenue means generally we thought it is sales. It could have actually interest income, dividends, which is not exact, or profit on sale of, so which is in the form of an income. Section 8 companies to disclose grant or donations received. Undisclosed income with the income tax department, wherever there is there, needs to be reported. And the guidance note has gone on to say what is undisclosed income. I will not get into that. And also there is a requirement in the CARO to comment on undisclosed income. CSR we have already seen. From 22nd of January, lot of compliance requirement. Comply, or if you don't comply, pay 2 times the penalty and comply. So it's almost if you don't comply 3 times. If you comply only 1 time. So this is the message that we need to give to the clients. And the ROC here was so categorical that I am not going to leave any company which has not complied with the CSR, which is Vijay Shetty was here. When he was so categorical saying that CSR, if somebody does not spend, I am not going to leave them. I am going to charge them penalty definitely. So please warn the clients. Now all these requirements, amount required to be spent by the company, amount of expenditure incurred, details of related party transactions and whether provisions were required or not was anyway covered under our ICAI guidance note on accounting for expenditure on CSR. Now the additional points, shortfall at the end of the year, total of the previous year shortfall, reasons for shortfall, nature of CSR activities. All these also need to be additionally given. Yeah, what are the changes in CSR? CSR committee not required if CSR spending is less than 50 lakhs. Set off of excess spent on CSR. This is interesting. Set off of excess spent on CSR in the next year is possible. Okay, towards such obligation subsequent years. The questions that kept coming was earlier years, if I have spent early, can I set it off? Means the answer is no. So now, since it is made mandated, if you spend more, you can adjust it against the subsequent years. Penalty for non-compliance of subsection 5 and 6, we have already discussed. Cryptocurrencies, disclosures need to be given by the company on cryptocurrencies also. I'm not getting into the details. Incremental disclosures for Schedule 2 and Schedule 3 taken from your presentation. Under the heading equities and liabilities, under non-current liabilities, Ind AS 116 requirement is brought in both under non-current liabilities and current liabilities. Statement of changes in equities, a couple of changes. What was otherwise given has now been asked to be given under a particular format. Trade receivables aging analysis, some more, which have significant increase in credit risk or credit impaired. Additional details are given there. For NBFCs companies, additional ratios are called for. The question that kept coming was whether for interim financial statements, whether the revised Schedule 3 is applicable. The guidance note has given an answer saying that whatever was the presentation you followed for the last year, that should be followed for interim financial statements, depending on whether you are following the complete financial statement or the condensed financial statement. So that means for the current year, you can still go with the old. From next year onwards, once you sign the revised Schedule 3, from June quarter onwards, the revised Schedule 3 will apply unless it is postponed. Any chances of postponing? Please consider. Yeah.
We should ask the industry to go and ask.
Absolutely.
The institute should not ask.
Yeah.
Let the industry go and ask.
Yeah. The penal provisions for non-compliance of section 129. I mean, we have come to the end of the Schedule 3 requirement vis-a-vis CARO. What happens if you don't comply with 129? 129 says, shall be in the form or forms as may be provided for different class or classes of companies in Schedule 3. If you don't comply, in the absence, I mean, managing director, whole-time director, in charge of finance, CFO, or any other person charged by the board with the duty of complying with the requirement of 129, in the absence, all the directors. That is why, let me tell you that it is better to have lesser number of directors in the company. Because if there, and similarly for designated partners, more the designated partners, more the directors, the penal provisions will apply to all of them. I mean, we have seen this. So in any case, shall be punishable with an imprisonment for a term up to 1 year, or with a fine of 50,000 to 5 lakhs, or with both. And of course, there is the FRRB. Would you love to talk about FRRB for a minute?
No.
Okay. No, but I think just a role of FRRB and non-compliance.
Financial statements is said. Whatever the financial results, quarterly results as per SEBI regulations are there, will they constitute as interim financial statements?
Yeah. No. That you are giving as per a template given by them. So if you are giving as per Ind AS 34 or whatever case, then it will be considered. But the
Ind AS
principles
34
of
itself, there is a footnote. They say this is
I'm coming.
Results given for SEBI, it will not constitute interim financial.
But the recognition and measurement principles will apply for the SEBI ones. What will not apply is that presentation format.
Disclosure.
Presentation format.
But somewhere, in fact, we are preparing an education material in Ind AS 34. That is where he's talking about. We should marry these two. So we are preparing this for SEBI. And the guidance note says this is not for SEBI. I mean, that somewhere we should say that, we should talk to each other and bring uniformity is what we are talking about. The penal provisions we talked about.
Recognition and measurement 100%.
Yeah, absolutely. Now, even the presentation, I think we should, because international.
No. SEBI is a little abridged one, whereas our format is much longer. SEBI wants.
So, sir, if you go by SEBI regulations, under regulation 52 and 33, different disclosure requirements are there.
No, see, they have their own perspective of governance and what information they want to.
Yeah, on the FRRB, would you like to just?
Okay. On FRRB, I'd just like to share with you. And I would encourage members who are having 5 years of hands-on experience and 10 years. There are two categories, also to apply to the institute, to become technical reviewers, and also to become group members. That's 5-year and 10-year threshold. You get CPRs, you get a token honorarium, and more importantly, you get the exposure of reviewing a financial statement of a reasonably large-sized company. And generally, all of us, by a human nature, you like to find gaps in others' work. It's very natural, very natural. We like it, and I would encourage that. And particularly senior members, you should become technical reviewers for QRB, where it is actually a hot review. You go to the other auditor's office, sit there for 7 days. You get paid a 6-digit number for spending 7 days. Sometimes it's more remunerative than doing a bank audit and the risk you take. So you get a reasonably good number. You can sit in a large office, look at the large audit done, and get understanding of their working papers, their approach, which will help your practice also. Parking that I said, coming to FRRB. FRRB has a process of random sampling across industries and size of companies. Annually, on an average, we are currently doing 80 to 90 companies. We have been trying to increase the volume, but due to capacity constraint, Institute always runs on crowdsourcing model. Unfortunately, we have only one Mr. Manohar Gupta, one Gururaj Acharya, whereas you require at least hundreds of them if we have to do more reviews. The good thing about FRRB reviews is these reviews are done not with an intent of punishing a person. These reviews are done to identify the gaps and tell the audit firm, look, these are all the non-compliances with accounting standard, audit standard, or Schedule 3 requirements. So these are the non-compliance. Be careful. If you repeat next time, then punishment. But otherwise, the idea is to build overall quality of financial reporting. That's the first objective. However, during that review, if we find that there is some work or some portion of work where the true and fair view has been impacted, so where there is inappropriate accounting, true and fair view impacted, then we refer it directly to the disciplinary committee for inquiring. But 99% of cases, we try our best to issue what we call as advisory, so that the firm can be cautioned and capacity can be built. And considering that most of you are here in practice, I would recommend the following. FRRB annually publishes a publication called Compendium of all the findings during the year. What I would recommend is, I'm sure most audit firms have a weekly staff meeting. Most firms have that habit of weekly staff meeting, half a day or 2 hours, whatever time. You can request one of the article students to take that publication and make a presentation for 2 hours, 3 hours to the staff, so that everybody is sensitized and that common mistakes can be avoided for your clientele. So these common mistakes, some of you might think as to be, we can forgive and all, but I'll just give you a small example. I'll give you a very small example. And I've seen this in the case of bank audits, central statutory auditors. We are supposed to be very senior firms and things like that, where you will come across audit report which will tell, gives a true and fair view of the profit stroke loss. It will be copied as it is and given. Now, a partner of 20-25 years experience, if he sign even the 2 pages audit report, he can't read. Do you want him as a member? Question number 1, do you want him as a member? Now, profit or loss, which means we also go give benefit of doubt. This year profit, last year loss. That is why he gave profit stroke loss. But that is also not the case. We go to that extent and give. Now, for a central statutory audit bank, where there are 3-4 firms who actually sign And this word profit stroke loss is there in the main audit report. What should be done? What should be done? Suppose the same thing is done by a CA final student. Would you not hang him? Would you not hang him? No, for a member who has to sign at a statutory audit level. I'm giving you one example. Like this, there are several examples. And this example I gave you is not a one-off. In that publication, these are called common non-compliances, which means you find it very often. So the publication does not give one-off non-compliance. It gives common non-compliance. If it is repetitive, then it comes in that publication. So it's a good publication. I would encourage you to use it for your internal training. Bottom line, Gururaj's objective was to highlight that these reviews are carried on a random sampling basis. It could be any firm. And idea is to give advisory, improve the quality. But if true and fair view is affected, it goes to DC. And I want to use this opportunity to invite you all to apply to become technical reviewers and group members, because you will benefit from that learning, and it takes maximum 3 or 4 days. And for your institute and for the sake of improving the quality of reporting in the country, definitely you can give that amount of time.
I have been part of this FRRB for almost now 10, 12, 15 years, I don't know. But the point is, we have learned a lot in the process. It's always, there are two ways of learning through your own mistake and learning through others' mistakes. I think it's the best, the knowledgeable person will learn through others' mistakes and avoid making your own mistakes. I think that's the best part of being in FRRB, because when you commit a mistake and you get caught, I mean, you can't save yourself. So I think that's the best part. So Manohar Gupta sir, myself, BP Rao, a lot of senior members are part of FRRB, and you will know the importance of compliance more when you are sitting in that particular position. And you appreciate when we see that people don't charge enough audit fees and do a very bad job, that is where those people should in fact be punished, because of them others are not able to perform, or the good job does not happen. The profession takes a beating. I think that's the message that we wanted to give from this subject. This is the implement. I agree.
I agree. I think it's work in progress. A QCBS model and all, it's work in progress. It will take time, so I don't think we can expect that. But what Institute is now doing is, wherever there is information about, there's a group in the Institute for monitoring tenders. We have a committee called Professional Development Committee. In that, there's a group for called Tender Monitoring Group. So what we do is, wherever we get information that people have quoted low and taken work, we voluntarily go and do a review. We appoint a peer reviewer or another reviewer to go and see whether the person is doing the work properly. So that's one effort which is there. Because on tender, it has its own plus and minus. Right?
I think overall the government is thinking of that L1. Forget about for the auditors. Overall L1 is not the best in that sense. So talking about, this is the implementation guide on resignation or withdrawal. The auditor should describe the circumstances while giving the reasons for resignation suitably, instead of mentioning ambiguous reasons such as other preoccupations or personal reasons or administrative reasons or health reasons or mutual consent. Even mutual consent cannot be a reason for or unavoidable reasons. The auditor should give valid reasons like pending or non-payment of audit fees, which is a valid reason for resignations. Couple of things, since it was Companies Act, I thought we'll just brush up on Companies Act. Board meetings through video conferencing forever allowed now. It was always allowed, but for certain 5 of these parameters, like approving financial statements, audit committee meetings and things like that, there was a restriction. Now forever you can have, even on these matters, you can have video conferencing. And then EGM up to 30th of June can be through VCM. AGM during the calendar year up to 2022, June 2022 can be on VCM. Afterwards, I think it will not be allowed. Corona will be going. So CARO 2020 we discussed. INC 2020, INC 20A by newly incorporated companies revised up within 12 months. You have to bring in the commencement of business. That means bring in the capital promise. Gap between 2 board meetings, 180 days for financial year 21-22 permitted. Normally it is 120 days. At least one director anyway, that is only for financial year 2021. AGM whose financial year ends on 31/3 also not applicable. Faceless assessment under company law is also going to be a reality very soon. This is what I liked from our Central Council member, Shri Priya. She said Companies Act is moving towards ACT. ACT standing for accountability, corporate governance and transparency. I think we are moving in that direction, which of course MPV very well mentioned. So thank you so much. It is 6 o'clock.
We have some online questions.
Yeah, we have some online questions. Quickly, maybe we could take it. Yeah, can you blow it out?
You want me to read them?
No, I mean, better read out so that others also.
Yeah.
I just tried to put it on the screen, but it's not. Yeah, it's coming on the screen. Chetan, to all panelists, considering a situation when quarterly stock statement figures does not match with the books of accounts, but company makes a disclosure in the notes that the same is in agreement with the books, will auditor have to qualify his opinion? If so, does he not need to make an evaluation whether it affects the true and fair view of the financial statements?
I don't think this will have a true and fair view. This is part of the additional regulatory information. It's a governance related aspect. Unless your balance sheet date is not tallying, that's a different issue. Then obviously true and fair view will come, but during the interim it doesn't matter.
So unbilled dues under trade payables covers only provisions or anything more. I think unbilled dues does not necessarily mean, under trade payables does not necessarily mean provisions. Unbilled dues, okay, provisions of the trade payables which are actually to be paid but for which bills have not been received. Unbilled dues under trade payables, I think the same question repeated once. These are the two questions which we have. Oh, okay.
I think you see Q&A.
Where is that Q&A?
Q&A.
Yeah. The question that Alama Prabhu has asked is, can we give both gross DSCR and net DSCR as an additional reporting information? I think if you are prepared to give both, it is fine. I would prefer to give net DSCR because that is higher. I mean, in that sense.
If you give what is there in guidance.
What is there in the guidance note is gross DSCR.
Yeah, I think you should stop.
Yeah. Does other information accompanying the financial statements include additional regulatory information? Other information accompanying the financial statement include additional regulatory information.
You mean director's report, etc.?
No. That is the 14 additional regulatory.
Yeah, those are additional regulatory information. Yes.
No, other information and additional regulatory information. These are two different things.
Yeah. No. They're two different things.
So while assessing material while assessing material uncertainty, the views of the auditor will generally be different than that of the management. Management will always be highly optimistic, but the auditor will always be realistic. How to reconcile such diverging views with respect to reporting?
That is a different topic.
Professional judgment. If QIS has to be as per books, then banks should give greater time for submission, which defeats the purpose of QIS. Better a QIS final is prepared for each quarter after the books are ready and submitted to the banks. Sir, this is a question to the banks. Now, see, the point we always talk about in financials, quarterly financials versus the final financials. Quarterly financials, speed is of more important than accuracy. That's why in the last quarter more time is given so that you can rectify. Finally, will a company's accounts look like a bank balance sheet with a lot of information with dubious reliability? Will companies' accounts look like a bank balance sheet with lot of information with dubious reliability? I think don't agree.
It's an observation.
Don't agree, not necessarily dubious. Dear sir, requested to Anand Prasad, requested to share the presentation. Deemed NBFC means both asset and income should be looked at to comment. Yes, it is both and, that's why I specified that. Please pursue
use my other questions on the top as well.
Done, done. We have taken.
No, sir. There's questions at the top.
Here, sir. You can scroll.
In the interest of time, should we stop?
Yes, sir. Yes, sir.
Yeah. I think we can answer. You send me these questions.
Yeah.
Maybe we can. Reply.
One round of applause, firstly. It's been such an honor to be part of this wonderful event to get up for the coming up audit season. On behalf of Bangalore branch of SISC, I would like to extend my heartfelt gratitude to our speakers and guests, CA MP Vijay Kumar, CA Gururaj Acharya, Mr. B.T. Shetty, Mr. Srinivas Kota and Ms. Geeta. Finally, I would like to call upon Chairman to present a memento to our speaker. Finally, I would like to thank all of you present here for making time to be with us today. Thank you, one and all.